Hello traders and investors, welcome back to the channel of Investment Advisors. In today's Market Vision series, we will discuss weekly wrap-up and what to expect next week. Friday was a mixed and jittery session for Indian markets, even as global indices rallied strongly. So let's break down the key highlights. Nifty inched up 12 points to close at 24,346 levels, while the Sensex gained 259 points, ending at 80,500 levels. Despite the gains in the intraday, the markets lacked strong momentum with volatility due to profit booking in select sectors. From the sectoral performance perspective, we saw mixed trends. The top gainers were oil and gas, which surged 0.73%, boosted by rising crude prices and strong earnings. Media sector rose 0.5% as streaming and entertainment stocks saw good buying. IT stocks edged up 0.27% due to stable rupee. On the other hand, the top losers were pharma, which dropped 0.67% due to profit booking after the recent rally. Metals as well fell 0.74% due to weak global commodity prices. The oil and gas rally was typically driven by strong global energy demand, while metals faced pressure from China's slowdown fears. Global markets were on a rally mode. US markets saw big gains, Dow Jones jumping 1.39%, S&P 500 rose 1.47%. Lastly, Nasdaq also jumped 1.51% because of tech and banking stocks that lead the gains. On the European markets, DAX soared 2.62%, CAC jumped 2.33%, as well as FTSE also saw 1.17%. The European markets were up because of strong earnings and easing rate fears. Asian markets, on the other hand, also saw gains, but it was mixed. Japan's Nikkei saw 1.04% up movement. Hang Seng saw 1.74% rise, whereas Shanghai's China was down 0.23% due to weak manufacturing data that had hurt sentiment. Now let's see from the perspective of charts and the open interest. So as you could see, Nifty in fact reversed the early gains on Friday, turning negative by mid-session due to profit booking and sector-specific concerns. Towards the market close, there was a recovery, but then still it closed flat. And the significant point to note was it was disconnected with the Sensex movement. So despite Sensex gained maybe some 0.23%, however, Nifty was almost like flat. As you could see, this is since there was a rally and then the sell-off that came off. So this has formed a kind of inverted hammer pattern. Now, whenever you see inverted hammer kind of pattern, majority of the times it would continue for the reversal. So in this case, the reversal, meaning to say there can be possibility of continuation in the sell-off from the higher levels. In rare kind of scenarios, we see that markets might open on top of this channel or level, and then from here we could see a significant buying that can come in. So now in this kind of scenario, since we had discussed that markets have been jittery, and at each level whenever markets have been going up, we see some sell-off coming in. So in fact, yesterday's or Friday's move, as you could see, it had already crossed the previous resistance, okay, or the high that the Nifty had given in the previous closing or maybe previous trades. Last Friday, in fact, we saw a significant up move in the morning trade, and then the kind of up move that we had seen, similar sell off had also come. So it was a straight, rise and then a downfall. So whenever we see such kind of movements happening, that means at the higher level there is no significant buying interest that is seen from the traders and investors. So immediately once we reached at this level, around 24,500 to 600 odd levels, whatever high that we had seen, we saw a good sell off coming in. That means that investors and traders are not confident at those higher levels. That is when the sell off had been immediately come in. Now, since we have been talking from a very long time that majority of the possibilities of a strike from India could be on the weekends. So could be that was one of the reason why the traders as well as investors were not willing to hold the long positions, and they would have cut down their positions here at the higher levels. That is when we almost closed at flat. So now since we are trading in a range bound kind of scenario, now for us this would be the major range bound kind of scenario. This zone, and like this we might trade for at least a week's time. Since already gift nifty suggests positive momentum, so we might see 50% of retracement coming in here, and then we might open positive compared to Friday's close, and then might start trading on the upward trajectory. But if at the higher level again if we see the sell off coming in, then that is a very clear indication that traders and investors are not at all willing to carry or continue with the long positions, and they want to cut down until unless the news or the tensions around India and Pakistan subsides. So overall for us, we have to see if on the Monday's trading session, if we start trading above 24,500 to 600 odd levels, then that remains as a positive trend. If we start trading below 24,200 odd levels, or maybe around 24,250 odd levels, then that is the first signal for us that the markets are not in a positive trend. Rather, it is better to take sell positions and then continue. So now let's see from the perspective of open interest. So at every higher level, as Nifty had approached, we had seen a good open interest built up that has been created. So as you could see at 24,400, there was a good 50% kind of open interest that was built alone on last Friday, and then again on 24,500 levels we see significant 60% open interest built up on the call side. Similarly at 24,600, roughly around 55 odd percent, and at every higher levels, as you could see, roughly around 50% open interest build-ups have been seen on the call side. So what this suggests is very clear that Nifty may not move beyond 25,000 levels. So this is a very strong resistance that we could see on the immediate basis for the 8th May weekly expiry. And then the subsequent is 24,500, which is equivalent to 24,500 odd levels. 25,500 and 24,500 has almost equal open interest positions being built. Now let's look from the perspective of support. The immediate support that comes is at 24,300 odd levels, and then the good strong strength that we could see on the put writing is at 24,000 odd levels. So once we see Nifty closing or coming near to 24,000 levels, for us that would be the initial trigger that the sell-off has begun, and then we might soon see 24,000 also being breaking out. So once that kind of scenario is triggered in the intraday, that could be the cautious approach for us to cut down on all our long positions, and then either be silent by watching where the market is headed towards, or we can take at most 25,000 or 25,500 kind of sell call positions, which despite market significantly moving up, might sustain this kind of resistance and may not approach beyond these levels. So for now, until 24,250 odd levels is not touched, we are on a safer zone, and if it trades above 24,250 odd levels, then there is high possibility that we could trade in a consolidated kind of range until 24,500 odd levels, and once this level is breached, then we might see Nifty approaching towards 25,200 odd levels, which is, at least from the perspective of 8th May expiry, it is difficult for Nifty to cross 25,000 odd levels. First struggle would be at this zone, and then further on the higher side. So on PCR front, overall if you see, it is 0.7, and at the money it is 0.53, because we hardly have any positions here compared to the far strikes. So on the at the money PCR, it is neutral to bearish, I would say. Now let's look from the perspective of Sensex. So even Sensex, we see inverted hammer kind of candle pattern that has been built. So again, this might be a kind of reversal candle, but at sometimes we also see that there is a positive momentum that could come in as gap up. Whenever such kind of gap ups get formed after the inverted hammer, then we might see a positive movement getting continued from here on. In fact, this would be a kind of very bullish move that we can see. So let's see from the perspective of Monday's market how the Sensex is expected to open. In fact, Sensex was comparatively positive to Nifty and had gained 0.23% or roughly 250 odd points on Friday session. In fact, the kind of strong move that we had seen in Sensex, we were of the belief that now it would be easy for Sensex to approach 82,000 odd levels, because we had already touched the high of 81,177 odd levels. So but then towards the close, it almost gave off 750 odd points and then closed at 80,500 odd levels, which is still below the previous days high levels. So as long as those high levels are not crossed, and Friday's high was roughly around 81,170 odd levels, once it starts approaching towards the zone and starts trading above, only then we should consider positive momentum coming in on Sensex. Till then we have to be on the sidelines or take short positions of the higher strikes, be it 83,000, 82,500, all these strikes, short positions can be taken until Tuesday's expiry. So if Monday we see calm market, then be ready for the volatile session on Tuesday on Sensex. So let's see, this level remains crucial for us, this level 81,200 odd levels. Now from the perspective of open interest, so similarly like Nifty, we could see at every higher levels of 500 points at 81,000, 81,500, 82,000, 82,500 and 83,000, we see significant open interest positions being built up. In fact, just in one single day, at all the 100 strikes on Sensex, you could see good open interest positions on calls have been built up. So this very evidently suggests that Sensex might approach 81,000, or at max can go towards 81,500 odd levels. Beyond that, it would be difficult, because there are no put positions are getting built at the higher levels. So that means that the put writers are not at all confident that Sensex would go up. So until 81,500 is what somewhere we could see some slight open interest positions that are have got built up on the put side. So overall, Sensex, we might see some range bound kind of moves coming in the range of 80,000 to 81,500 at max. So this is the range of 1,500 points that we might trade in the next 2 days until the May 6th expiry. So on the lower side, if you see it closing below 80,000, that would be the first trigger for us to cut on all our long calls and then be on the sidelines, or majorly take the short positions for the quick downfall to come in, at least on the expiry. So if you look from the perspective of PCR, overall it is 0.7, which is neutral to bullish. On the at the money PCR, it is 0.5, which is maybe neutral to bearish, is what we could say. Now from the perspective of Bank Nifty, in fact, had given a big rally, and looking at this rally, it was confirmed that if it closes strong, then we might continue from here on. But then it closed very weak, almost we can say as flat. So now this is a kind of indecisive trade, or candle that it has formed. So from this candle, if on Monday 50% of retracement happens and Bank Nifty opens positive, then some strength can be built up until 55,700 odd levels. Once it crosses the previous days high levels, then we might start seeing Bank Nifty bouncing on the higher levels and approach towards 56,000 levels, which was the previous 52-week high or the all-time high for Bank Nifty. Till then, we will have to trade on a cautious note. Now suppose if Bank Nifty opens weak and starts trading below the lower levels of Friday, which is roughly around 55,000 levels, then we could see Bank Nifty approaching towards 54,000 odd levels. Since there was a almost 6 to 700 points of rally that we had seen, and then the entire rally got faded away. So that is very concerning, and it has closed just tad above the previous days close. So that is something negative, and we might see some selling pressure coming in, because at all the higher levels there was a good sell off that was seen. And if the market opens flat, assume, okay, then people who continued with their sell off might continue further, and Bank Nifty might approach downward level. In case if it opens positive, then whosoever had shorted would become little cautious and then track. And if the Bank Nifty is sustaining towards the upward levels, we could see some short positions getting sold off, which would further push Bank Nifty towards the higher levels. So overall, Bank Nifty is at a crucial juncture. If 55,000 levels is broken, we might approach towards 54,000 odd levels. If on Monday's session Bank Nifty opens positive and sustains above 55,300 odd levels, then we might see some positive momentum getting built up, and we might start approaching towards 56,000 levels only when the previous day's high is taken out tomorrow. Now let's see from the perspective of open interest. So some disconnect is what we could see. Yes, at the higher levels we could see some strength in call sellers, and that would act as a resistance. However, at the lower levels there is a significant built up, and positions are held intact, despite there is some jittery in the kind of overall performance of Bank Nifty. So as you could see, at 53,000 levels, put writers have been holding strong. Similarly, at 54,000 levels, compared to the call writers, they have been holding quite long. But when you look at the higher level, you almost see equivalent kind of position getting built up even by the put writers. So now 55,500 levels can easily be crossed, because there is a good positions that are being held by the put writers at those levels too. So now we have to see if if Bank Nifty closes below 55,000 levels, then that would be the cautious approach. If not, then we might easily cross 55,500 odd levels as the first rally, and then beyond that, if it sustains, we might approach towards 56,000 odd levels too, and this would happen on a swift basis. It would not take more than 2 to 3 trading sessions, or at max, if all the other indices also remains positive, then we might see the banking stocks pulling off and then approaching towards 56,000 levels just in a single trading session too. So overall, compared to other indices, Bank Nifty on the charts seems to be negative. However, on the open interest perspective, it seems to be quite positive, because near to at the money and at all the higher levels, we see some strength that is available from the put writers. So overall PCR stands at 0.9, which is positive and bullish, and at the money also it is 1.01, which is again quite bullish. Now let's look from the perspective of FINNIFTY. So FINNIFTY also gave kind of inverted hammer candle, which is most of the times negative, and would continue the trend on the reversal side, or we might see some uptrend coming in only if FINNIFTY opens 50% to 60% above the previous day's close, and then starts trading in this range. Immediately once we see the previous day's high is taken out, then we might see positive momentum that gets built up on the higher levels, and we might see FINNIFTY approaching even 27,000 odd levels, which was the previous 52-week high, or from this zone is what we had seen the sell off coming in. So net if you see, this zone remains very crucial. Below 26,000 odd levels, we might see a sell off coming in FINNIFTY, and only if it crosses below the previous day's high of 26,350 odd levels, only then we should go long, and then FINNIFTY might trade positive. So let's see from the perspective of open interest. So open interest seems to be quite skewed, and majority of the built up is there only in this 1500 point kind of range. So not 1500, maybe just 1000 point kind of range. So in fact, at 26,000 odd levels, we see good strength from the put writers, and there is also built up or maybe positions held from the call side. At every 100 points, we see both call writers as well as put writers almost holding similar kind of open interest positions. So there is a tug of war kind of situation. Once FINNIFTY crosses about 26,500 odd levels, then we might see a significant up move coming in towards 27,000 odd levels, because there is no strong resistance at the higher levels beyond 26,500 odd points, and we see a big resistance at 27,000 odd levels, and in fact even yesterday on Friday there was big open interest position that was seen as built up. So it is very evident, and it concludes that at least for some trading sessions, 27,000 forms as a crucial resistance for FINNIFTY, and at every lower level we have some strength that we could see. So like at 26,000 odd levels, we see good support, and then even 25,500 we see good support, and at 25,000 levels too. So FINNIFTY again will trade in the range of 26,000 to 26,500 in the initial stage. Once on the upper side it crosses, we could see the window getting open towards 27,000, and as long as 26,000 odd levels is sustained, we need not to worry. But yes, once we start seeing the call writing positions built up at the lower levels, then we might have a bigger or wider range even for FINNIFTY in terms of movement. So overall on PCR it is 0.7, which is good and slightly bullish. At the money it is 0.91. Majorly it is coming from these 2 to 3 strikes, so which is again bullish to positive. Now lastly, let's talk from the perspective of FII and DII data. So FIIs have in fact cut down their short positions on index futures, and they are just holding 8,500 open interest positions on index futures. On stock futures, they continue to hold long positions with 17.69 lakh contracts, which is quite bullish. On call options, they have been long with 74,000 odd contracts, and on put options they are again long. That means they are not positive. That at higher levels we could see the sell off coming in. That is when they are long with the put options with 36,350 contracts. So net FIIs are holding 37,800 open interest positions on the index options, which is mildly positive, as long as the previous positions what we had seen that they had hold. Now from the perspective of proprietary traders, on index futures again they are slightly bearish with 6,000 contracts negative. On stock futures they are mildly bullish with 2.86 lakh contracts. On call options they are strong with 94,000 contracts being long, and on put options they are again long with 59,682 contracts. That means that they are fearing or expecting the markets to see a fall. So net proprietary traders are also equivalently holding 34,000 odd contracts on index options. So both FIIs as well as proprietary traders are mildly bullish to long. Now from the perspective of retail traders, they are short on index futures with 26,000 odd contracts. On stock futures they are long with 16.28 lakh contracts, and they have been continuing these longs from a very long time. On call options they are bearish with 1.69 lakh contracts shorts, and on put options again they are bullish because they have shorted 1.39 lakh contracts on put options. So net clients or retail traders are holding 30,000 contracts negatively. So they are short 30,000 contracts, which is not maybe quite bearish, I would say. So either way, if the market opens, whether it is positive or in the range bound scenario, I don't think much of the losses would be seen for the retail traders, and they would continue with their open interest positions even on Monday. Only if there is a decisive up coming in on Monday, then we might see some changes, or there should be some cut down on their positions. Else if they might add on the short positions is what I am of the belief. Now let's see from the perspective of cash markets. So DIIs have been quite positive, and they have bought for 3,290 crores in the cash market, and on FII side they have also been quite bullish and bought 2,770 crores in the cash market. Now since on all the news channels we have been seeing that there could be some attack or strikes from India on the weekend, but you look at the holdings that the FIIs as well as DIIs have taken in the cash market. So this suggests that tomorrow again on Sunday we might not see any strike happening, and next week would be quite positive for the markets, because though the news channels have been spreading lot of information, but then on the activity wise on the both FIIs and DIIs we don't see any fear from their end coming in. There have been some hedges that they would have taken on the derivative side, but still they are quite long and then positive, despite a lot of tensions between India and Pak topic. So overall, it seems to be positive for the Indian markets to be there next week, because there have been some good momentum that is expected to come in with the kind of positions that the institutions have taken. So from the trading strategy perspective, you have to continue with the defensive bets in FMCG and IT, and avoid any aggressive positions in metals until China demand improves. And oil and gas stocks also could see further upside if crude stays firm from here. So on the closing thoughts, yes, while Indian markets struggled for the direction on last Friday, global cues definitely remains strong. And at least on Monday, we might see, because of those global cues, some positive opening happening. But yes, we have to stay cautious until the news on India and Pak tensions subside, and we have to focus on stock specific moves. Overall, if there could be any strike that happens, then we might see significant 2 to 3% downfall happening on major indices like Nifty and Sensex. So that's it for today on the Market Vision channel or series. So if you have not come to our channel and just looking only at today's video, if you liked it, please share this with your friends and also subscribe to our channel for similar such daily market insights. If you have not subscribed yet, please do so. Hit the bell icon to get instant updates. Thanks until next week's expiry on Sensex and Nifty. Thank you. Hello and welcome to the channel of Investment Advisors. As part of Market Vision series, let's analyze and predict how the markets are expected to trade tomorrow. Before that, let's have a quick recap of how the markets performed today. Indian equity markets traded flat yesterday, with benchmark indices showing little movement. Today the markets were shut due to holiday. Nifty closed just 2 points lower at 24,334 levels, while the Sensex slipped 46 points to end at 80,242 levels. Investors remained cautious ahead of news on retaliation by India towards the terrorist attack. Broader markets were mixed today, with some sectors outperforming while others faced selling pressure. Realty sector surged 1.91%, continuing its strong momentum. Pharma and healthcare also saw buying interest, closing at 0.44% higher. IT stocks slipped 0.35%, possibly due to profit booking. Media stocks were weak and were down by 2.2%, while PSU banks took the biggest hit, falling 2.23% on concerns over asset quality. Global markets rallied. US tech leads, whereas Asian markets were mixed. Dow Jones jumped 1% today, S&P 500 rose 1.5%, and Nasdaq soared 2.5% on strong tech earnings as we speak. European markets were mixed. FTSE traded flat, while DAX and CAC had a holiday, closing at previous levels of 0.32% and 0.5% respectively. In Asia, Nikkei climbed 1.13%, while Hang Seng and Shanghai were shut. The last closing was at 0.51 positive and negative 0.23% respectively. Commodities traded range bound. Crude gained, whereas gold and silver dipped. WTI crude rose 1.32% to close at 58.98 per barrel on supply concerns. Gold faced selling pressure at higher levels. It is trading now at 95,730 rupees per 10 gram. Silver as well saw profit booking, closing lower at 98,000 rupees per 1 kg. So now let's deep dive and see the chart as well as open interest to understand how the market is expected to trade tomorrow. So as you could see, so there was some range bound kind of trades that we have been seeing on Nifty indices. It is almost like 1, 2, 3, 4, 5, 6, 7 odd trading sessions where we have not been able to take any decisive moves and then fall up from there on. So now the first crucial resistance is going to be around 24,800 odd levels for us. So since market has been trading in range bound, we have to very closely track once this 24,400 odd levels gets covered on the top side, then from here on we will start seeing upside rally coming in, and it can lead towards 24,800 odd levels because that is the first resistance that we have. On the downside, in case if the retaliation news continues and then if Indian economy or the defense ministry starts attacking on the Pakistan, then we will start seeing Nifty sliding at least 2 to 3%. And in case if Pakistan also at the same time retaliates from their end, then we might see at least 2 to 4% downfall coming in on the major markets. So this level of 24,000 or maybe 24,200 odd has to be cautiously seen. So once we start trading below 24,200 odd levels, then be rest assured that we will start moving down. So as long as 24,400 levels on the higher side is not broken and 24,200 levels on the lower side is not broken, then we might trade in the range bound kind of scenario. So the major support that we are going to get over is at 23,800 odd levels. That would act as a strong support for us. Once that support gets broken, then we might start sliding on the downside. So we have to trade cautiously and see as long as 23,800 odd levels is sustained. So we will be trading in a range bound kind of scenario from 23,800 odd levels to 24,400 odd levels. So 600 point range is what we would be trading. So as long as this range is maintained, then it is okay. We will continue in the consolidation for another 1 week. Post the news on the attack on Pakistan and then subsequent re-attacks coming in from Pakistan on India, that will have a decisive mode to be taken even on Nifty. Now let's look from the perspective of open interest. So on the open interest, as you could see, at all the higher levels we see a sharp increase in the open interest built up. So as you could see at 24,800, which remains as the first crucial resistance for us on the higher side. Second comes at 25,000 odd levels, and then subsequently at 25,200 odd levels, and then lastly at 25,500 odd levels. So at every higher level we see significant open interest positions had been built up. So this suggests very evidently that markets are going to put a lot of pressure at the higher levels. And since alone on Wednesday we had seen good built up of positions that had happened at every 100 points at the higher levels. Now looking at the lower levels, we see immediate support coming in from the put writers at 24,300 odd levels, and then 24,000 levels is where we could see a good support coming in. So the first strong support for us is going to be 24,000 level. So once we see Nifty falling below 24,000 levels, that would be our first trigger. immediately we have to cut down on our long positions and take the short positions. And also we will closely watch on how the FIIs as well as DIIs along with the proprietary traders have been taking the positions. So their positions will also be helpful for us in terms of defining as to what do they think of the markets. Is there any probability of maybe the retaliation or maybe the attack on the war front is expected to happen? If those are the cases, then these institutions would be the first one to understand and get to know about the news, and then they would start cutting down on their positions. So we have to exactly mirror or follow them based on how they have been taking the positions. So as we were discussing, we do have support at 23,500 odd levels, but at the lower level that support may not be sustained if we start seeing a selling pressure coming in. So we have to remain cautious and trade in the range of 24,000 levels until 25,000 levels, which would be the highest resistance for us. So 24,800 would be the first resistance, and then next would be 25,000 odd levels. So overall, talking from the perspective of PCR, it is one which is positive. On at the money, it is trading at 0.7, which is neutral to bullish. So as we had seen on Wednesday, there was some selling pressure that had come in towards the end of the day. However, at the closing, it was flat, almost kind of doji kind of trade that we had seen. So overall, looking at the world markets which are positive, we might also open positive tomorrow, and those levels would be the decisive levels for us. If it starts trading above 24,400 odd levels, then we can go long, and if it starts trading below 24,200 odd levels, then we have to take short positions. Now let's see from the perspective of Sensex. Sensex also had a doji kind of pattern that was created for the second day, and doji pattern talks a lot about the continuation or the reversal. So in this case, as we could see, we have been trading in a range bound kind of scenario for almost like 1 2 3 4 5 6 and 7 trading sessions. So now, since it is almost for a week that we have been in a consolidation mode, this week we might see some range that can be broken. So on the higher level, so this would be the first resistance for us, roughly around 81,000 odd levels. Once we start seeing Sensex crossing above that level, we have to cut down our short positions and be in a wait and watch mode until and unless there is any news on the war front that comes in. If there is no news, then maybe the markets would positively trade and continue on the higher levels. The first resistance for us at the higher level again would be at 82,000 odd levels. So this is going to remain a very crucial level, because if Sensex crosses above that level, then we will not have any resistance. So we might start seeing the movement happening immediately at the higher levels. So we would continue to become very strong once we cross 82,000 odd levels on Sensex. On the lower front, the first support for us is going to be at 80,000 or 79,800 odd levels. Once this level gets broken, then be ready for markets to come for a free downfall, and then this would also be acting as a strong support for us, which was the previous resistance. And since we had broken that and started trading at the higher levels, so 78,800 levels remains crucial for us. We touched here, and then these saw the reverse back on the higher levels. So now we have to wait and see if this levels further comes, then we might see this as a selling pressure. We might not get a support here at all. If the news is bad, we might start seeing the Sensex sliding down. So 78,800 is the crucial support on the immediate front for us. And on the higher level, once Sensex crosses 81,000 odd levels, be ready for it to move towards 82,000. Now let's see from the perspective of open interest what we can analyze. So on the open interest, we have resistance at every 500 odd levels on Sensex. However, if you see these resistance are not those significant. So the significant ones are only at 82,000 odd levels and then at 82,500, which suggests that until May 6th expiry, Sensex might not reach towards 82,000 or 82,500 odd levels, because these positions, open interest positions, were only built on 30th of April. So in just one single day, we almost on many of these strikes at every 500 levels, we see 20% to roughly 70% of open interest positions that were built at the higher levels. If the operators or the big institutions were so doubtful about the markets, then they would have started taking positions at the lower levels itself, but that is not the case. In fact, you see some support that is coming in. Roughly around 60% of open interest positions were built alone on Wednesday at 80,000 odd levels. So that means 80,000 is going to remain the immediate first support for us. And then at the lower levels, we have at 79,500 odd, which is not that strong. So the next support is going to be at 79,000 odd levels, and the last support will be at 78,000 levels, which is quite far away. Maybe if there is no news on the war, then we might not even go towards that range. So we have a big range that has created on Sensex from 78,000 odd levels to 82,000 odd levels. Given the fact that we have high weeks, the weeks is trading above 18, so that means there is some uncertainty that we have already been seeing, and because of that we can expect wild moves to be there. But yes, the immediate support for us is at 80,000 odd levels, and then the first resistance for us should be at 81,000. Once we start moving beyond 81,000, then we might swiftly move towards 82,000 odd levels. So on the PCR front, it is 0.8 for overall and 0.77 for at the money, so which is strong and maybe bullish too. So we have to see how the Sensex is expected to trade tomorrow. From the bank nifty perspective, so we have been seeing that at the higher levels there is a selling pressure that is coming in. So in fact, day before yesterday also on 29th April, we saw bank nifty moved or inched towards the 52-week high, and then suddenly we saw a selling pressure coming in, and in fact yesterday it gave a big moment. However, towards the end, again there was a lot of selling pressure that came, but there was a recovery. So at the higher level there was selling pressure, at the lower level there was buying, because at the same, since there was a big candle here of positive momentum and great buying, that is when immediately once we came towards that support zones, we saw good buying interest coming in. So now from the perspective of tomorrow's trade, so 54,700 odd levels would be our first support. Once this support gets broken down, then we might start seeing selling pressure coming in on the bank nifty. And similarly for us, the first resistance should be the previous day's high, which is 55,500 odd levels. Once we start trading above this level, then that should be considered positive, and we can look for positive trades for tomorrow. So as long as bank nifty trades within this range of 56,000 odd levels, which was all-time high or 52-week high, which was created recently previous week, Until here we will trade in the range bound kind of scenario. Once these two ranges are broken, 54,700 odd levels on the lower side and 56,000 levels on the higher side, then we might swiftly start moving upwards once we cross 56,000 odd levels. So we have to trade cautiously on bank nifty because we have been seeing range bound kind of moves for almost a week's time. So once either of the ranges at the lower or higher level gets broken down or broken out, then we might start seeing a good buying momentum as well as selling pressure that would come. So let's talk from the perspective of open interest now. On the open interest at every 500 levels we see good buying also as well as good selling as well. So the put writers remain strong at almost 55,000 odd levels, and they have also been building good open interest positions at 55,500 odd positions too. So these two strikes are going to remain crucial in the immediate stage. So once we start trading above 55,500 odd levels, then we will start seeing a good build up of open interest positions even at 56,000 odd levels. So we in fact on Friday saw some on Wednesday saw some open interest positions that were unwind at the higher levels for 55,500 as well as 56,000 odd levels. It was very minimal though, but as you could see at every 100 points again we see there is some buying momentum that has come in, and which is definitely giving a heated moment for the sellers. So once bank nifty breaks that levels on the higher side and starts trading above 55,500, we immediately will have to cut down on our short positions, since there is a good support that is already there at 53,000, 53,500, 54,000 odd levels. And since bank nifty have also been trading at the higher levels, immediately once we see some sell off coming in and bank nifty approaching towards the zone, we see buying interest coming in, and then it is pushing bank nifty towards the higher levels. So until unless we do not break on the lower side, there is no point in taking short positions. It is better let the market suggest us where it is headed towards. Once we see a strong closing basis breakdown happening below 54,700 odd levels, then that becomes a confirmation for us to start taking short positions. As long as this zone it starts moving at the higher levels, then it is better to be watchful of the markets, or once it starts crossing above 55,500 odd levels, then we can strongly believe and take positions for the higher levels, and maybe you can take put shorts at the lower levels, or you can take call buys for the higher strikes, or maybe at the money strikes too. So as long as bank nifty trades below 54,700 odd levels, it doesn't break those levels, we are okay to continue the positive trades. But once it starts trading beyond 55,500 odd levels, we have to remain cautious with our short positions and cut down immediately, because we might see a swift move or rally coming in post that. So on the PCR front, it is trading at 0.9, which is positive, and at the money it is almost 1, which is again positive. Now let's look from the perspective of FINNIFTY. So FINNIFTY also had been trading negatively. So as you could see, for almost like 1, 2, 3, 4, 5, 6 odd positions, we had been seeing a downfall coming in on the FINNIFTY. So since for us this zone remains crucial, so as long as we do not break on the either side, we might trade in the range bound kind of scenario. Once at the lower level we start trading below 26,000 levels on the closing basis, then that is considered to be negative, and then immediately we will have to start taking short positions on FINNIFTY, and once it starts trading about 26,700 odd levels, then we might start trading on positive basis. So as long as we are in this range bound kind of scenario, then we are okay to move. In this zone. So now let's talk from the perspective of open interest. So at 26,000 odd levels, we see a very strong support coming in on FINNIFTY. So despite there have been negative moves on the charts, however, when you look at the open interest positions on FINNIFTY, it is trading at 26,000 odd levels from a very long time, and then this acts as a very strong support too. So as long as this is not broken on the lower side, then we can continue holding with our long positions. Once you decisively see and a strong closing below 26,000 odd levels, that is the day we would have the first trigger, and then markets or FINNIFTY can start trading on the lower side. So from the perspective of long side, if you see, there have been some open interest positions that are built up even at the very high level, that is 26,500 high level on the put writing side. So what that suggests, it is very clearly evident that gradually put writers are have started taking the positions at the higher strikes. So when there is the news on the war subsides, then we might immediately start moving swiftly at the higher levels, and can cross the 52-week high that FINNIFTY had created very recently, and start trading at the higher levels. So now from the perspective of PCR, it is trading overall at 1, and at the money it is trading 1.26. Now from the perspective of FII and DII movements, so as you could see on index futures, FIIs have been holding with the short positions. So net open interest positions they have is 10,000. On stock futures, they have been quite positive and bullish from a very long time, and are holding 17.7 lakh contracts of open interest on stock futures. On call options, they are long and quite bullish with 1.94 lakh contracts. However, on put side, they have positions of 88,388 long positions. So this suggests that they are expecting mildly correction on markets. So net they are holding 1.05 lakh contracts on the index options long, which is net positive. On proprietary traders or the prop traders, if we call, on index futures, they are mildly short with 1600 positions. On stock futures, they are mildly long with 2.82 lakh contracts that they are holding. On call options, they are bullish with positions of 95,000 odd contracts, and on put options they are again bearish with 34,594 contracts, since they are long on put options. So net proprietary traders are also long with 61,300 odd contracts. So both FIIs are long on markets or index options, and also DIIs are long on the index options. So now let's look from the perspective of clients. So on index futures, they are short with 30,000 contracts. On stock futures, they are long with 16.17 lakh contracts, which is quite bullish and positive. On call options, they are client or retail traders are short by 2.9 lakh contracts, which is too huge. And on put options, they are again short by 1.69 lakh contracts. So net retail traders are holding 1.21 lakh contracts on the major indices. So now what this suggests, FIIs are positive, proprietary traders are positive, but retail traders on the other hand are negative. So whenever the institutions are long, that means they have some information. They are the market operators and they can manipulate accordingly, right? So until and unless there is no news on war front, then retailers holding strong short positions might face lot of challenges once the market starts moving on the higher end. So now let's talk from the perspective of DII positions on the cash market. So on the cash market, DIIs have taken 1,792 crores of buying positions, whereas on the FII side, they have just taken 51 crores of positions. So now on the cash market, they have been they have cut down their positions overall, but on the index options and derivatives overall, futures as well as index options, they have been holding long positions. So we have to see how the markets the next week is expected to perform overall, because we have a weekend and there could be some news. But tomorrow's trading close would be very much important, because in case if FIIs and proprietary traders take huge position tomorrow, then there is nothing that is expected to happen over the weekend from the war perspective. So we might see some bullishness getting built up, and then accordingly the next week the markets can trade at the higher levels. So overall we have to be cautious only on the news front, because if we hear any attack or war kind of scenario coming in, then we might swiftly start trading at the lower levels. But if there is no news that comes in over the weekend too, then next week for sure we might trade positively. But yes, tomorrow's trading is going to remain crucial in terms of understanding that how the institutions will be placed in terms of taking their positions, given the fact that we have a weekend. So overall, if we have to summarize, then markets remained range bound and selective sectoral movements had been seen. Global cues were positive. US markets have traded quite well, but yes, Indian investors stayed cautious. And then lastly, we have to keep an eye on the upcoming news on the war front, and also the corporate earnings for further direction on the markets. So that's all for today, as part of market wrap up. So stay tuned for more updates, and don't forget to like and subscribe to our channel. So see you tomorrow.
What's up my gang? Welcome to hood. Pune chirip kara table wonder dude. Mego gangs and their amnesia reveal chid baju. Every young watch the hood with every all of the mood. What's up my gang? Welcome to hood. Pune chirip kara table wonder dude. Mego gangs and their amnesia reveal chid baju. Every young watch the hood with every all of the mood. उनके बालों के कॉल करे मेको मेरे dude. कहने की बात पहले rap पे मैं crew. मैं OGs के playlist पे पहले से हूँ. रोजाना मेरी चूते लगी हिंदी में तू. वो कलाई जैसे बच्चा से young old school. आने तेरे सुन के मेरे को लगता तो फुल. तेरे जैसे चालों को गलती करूँ. तेरा आवाज बन फेंक जैसे फेंक रहा तू. शौक में रुके रहते हाथ ऊपर. साथ में साथ शूटर. मेरे होमी लोग पे लेडी सीधा हाथ ऊपर. मेरे को लग रहा है ट्राई करा छाट ऊपर. तेरे को लग रहा है भूना लेकिन शार्प शूटर. मैं झगड़े नहीं करता क्योंकि पीस मेरा खून. मैं एड्रेस ने बोलता बोलता ट्रिप गाइस से हूँ. सीधा फायर होते आउट व्हेन यू स्टेप इन माय
Hello, traders and investors. Welcome back to your daily market vision wrap up. Today, Indian indices showed positive cues start of the day, but closed on cautious note, while global markets leaned positive. So let's break down the key trends, sectoral performance, and what's expected for tomorrow. Indian markets closed on indecisive mode. Nifty closed barely 7 points up at 24,335 levels. Sensex as well gained 70 points in a lackluster session and closed at 80,288 levels. Markets are in fact waiting for fresh triggers on the likelihood of escalations between India and Pakistan conflicts and global cues. Broader markets remained mixed. IT sector gained 1.23%. It outperformed majorly due to weak rupee and US tech strength. Oil and gas jumped 0.47% due to crude price stability. Media dropped 0.79% and metals as well lost 0.95% due to profit booking. Pharma plunged 1% due to US FDA woes and muted earnings. There seems to be a good sector rotation which is evident. Coming to the global markets, all the global markets remained positive. From the US perspective, Dow Jones climbed 1%, S&P gained 0.76%, and Nasdaq jumped 0.71% as we speak. On the European markets, DAX closed positively with 0.8% gains. FTSE again gained 0.55% based on the positive momentum. CAC saw down performance and closed negatively at 0.24%. On the Asian front, Nikkei remained positive and closed 0.38%. Hang Seng, on the other hand, also was positive but mildly closed at 0.16% gains. Shanghai overall remained flat due to China's stimulus, which is in focus. There is global optimism that is supporting the sentiment, but India's underperformance hints at local caution because of the war expectations or tensions that we are seeing between India and Pakistan. Now let's discuss from the perspective of charts and open interest as to what it suggests for tomorrow's trade. So this is the Nifty daily chart. So today, as you could see, market opened on a positive note, but then was unable to stay put, and then we saw a good selling pressure that had come in, and it had closed towards the day's low. So as you can see the pattern, it indicates doji. So we also had previously the doji, but from there we had outperformance. Now at this level we might see underperformance coming in, and from tomorrow we might start sliding on downside. So we are still at the resistance levels, and this resistance level is surely going to have a major impact on uh, Nifty and then going forward for the subsequent week. So as today there was a news announcement that India's Prime Minister had already notified um, to all their ministries as well as to the army, stating that they have been given a free hand and then begin with whatever decisions that they want to go ahead and take to retaliate for the terrorism that Pakistan had uh, done on India. Now, this would surely have impact on markets too. So markets would surely trade cautious tomorrow, and then if the escalations rise, then we might start seeing the sell-off coming in, because markets do not like uncertainty, and if this uncertainty continues and can lead to the higher escalations, then we might see a downfall coming in the markets too, because majority of the sectors will start underperforming, or there would be a down performance that would be seen except for defense sector. So given the kind of scenario that are being seen and the kind of news that is getting circulated, so this zone was a kind of high that had created today, and then that is the reason we had seen the sell off that had come in. So from tomorrow, if the markets is trading below 24,200 odd levels, then we might see underperformance coming in the markets, and then gradually we will start the sell off, and then we will see big candles coming in as the news on the India Pakistan conflicts continue. So trade cautiously from here on, and keep the immediate shorts stop loss at 24,400 odd levels. If markets start trading above these levels, then we will not take decisively long positions, but it is okay to take the call sell at the higher levels, could be 25,000 or beyond 25,000 odd levels, so that if the market turns even positive for maybe a week's time, based on whatever the news outcomes that come in, still it may not decisively cross 25,000 odd levels in a week's span. So still we would be in profits, because we are neither decisively long, nor we are excessively short. So the good approach would be to take calls at the higher levels around 25,000, 25,200 and above, and then trade cautiously. If we see decisive movements coming in and there is a big candle that gets created, then gradually we can rotate the strikes and bring it towards 24,400 odd levels. Now let's see from the open interest perspective. So tomorrow is the weekly expiry for Nifty. In fact, today we see huge positions on the call side being built up. So there is a good writing that had happened. Roughly 60% of writing is seen at 24,400 odd levels. Then even at 24,500 odd levels, we had seen roughly around 40% of open interest positions that were built today. And at every strikes, if you see at the higher levels, we see good open interest positions that have been taken up. So what this suggests? It suggests that tomorrow Nifty might not trade positively, despite it can open at the place where it closed today, roughly around 24,300 odd levels, and then from there it might not sustain because there is already a selling pressure that we had seen, and it is expected to trade at the lower levels. So immediately 24,300 would act as a support, because there is also roughly around 40 to 45% open interest on the put writing that had emerged. So this would act as the immediate support. If this support is taken down, then we might approach towards 200, 24,200 and 24,100 odd levels. So tomorrow's expiry again is going to be crucial for Nifty, because this would put across the trend for the subsequent week. And since there are already a lot of talks on the war front that is going on, so we might start turning bearish, at least for 1 to 2 weeks time, until there is some decision that comes as an outcome because of this talks between India and Pakistan war. So later to that we can take positions, but as of now, on the higher side it is difficult for Nifty to move. So on the lower side we have to remain cautious. Immediately once it closes before 24,000, below 24,000 odd levels, then we might see sliding that can happen extremely towards 23,500 as the initial support, and then towards 23,000 odd levels too. On the PCR front, overall it is trading at zero point 0.8, and at the money it is 0.64, which is not so bullish. So some caution has to be taken on Nifty for tomorrow's expiry. Moving on to Sensex. So Sensex again formed a doji kind of pattern, which very clearly suggests that towards the resistance level we saw underperformance coming in, and this underperformance could continue tomorrow and slide down further. So we have to wait and see how the candles are getting formed. So if the candles are lower high and lower low, that suggests that we might expect to see the downfall coming in maybe a week's time. So already we had seen some underperformance today. So Sensex, despite opening on a positive note, it crossed roughly around 80,500 odd levels today, and then on the higher side we saw selling pressure coming in, and it closed just tad below previous day's close. So just 70 points it closed positive. So this from today suggests that there is some underperformance that would be seen on the Sensex, and then immediately once it starts trading below 80,000 levels, that would be the first approach for us to take short positions. So positions can majorly be taken on the calls at the higher strikes, roughly around 82,000, 81,500, and 81,000 odd levels. So immediately, if we see there is some positive momentum coming in and Sensex is approaching towards 80,500, that would be the first level for us to close our positions for 81,000 odd levels for the upcoming week expiry. So as of now, it very evidently suggests that it is okay to take short positions at the higher levels, at the higher strikes, so that even though if market stays neutral or turns positive, it might not come towards 82,000 odd levels or cross beyond that. So this is the approach that we are going to follow for the coming week. Majorly, the trend seems to be on a downward trajectory, but yes, we have to see whether that continues based on the news that is getting circulated, or it would altogether have a positive note. So let's see from the perspective of open interest. On open interest too, as you could see, we had Sensex expiry today, and 6th May's trades have already been taken. Um, and then as you could see, today being the first day of trading for 6th May expiry, we have already seen a huge built up in the call side. So this suggests that at least in the initial stage, 80,500 remains crucial and a strong resistance for Sensex. So beyond that also we have good open interest positions being built at 81,000 odd levels, and then subsequently at 82,000. So as we had discussed that these would be the levels for us to or the strikes for us to take short positions. We have already seen roughly around 50% of open interest positions already being taken at 81,000 and 82,000 strike, and even at the 80,500 strike we see quite positive trades on the call side. So this suggests that overall the markets or the call writers are expecting to put a lot of pressure, and Sensex might trade below 80,000 odd levels. So from tomorrow itself, if it starts trading below 80,000 odd levels, then that would act as a strong uh, uh, you know selling pressure for Sensex. And then since we do not have any good support coming in from the put writers until 79,000, so we might immediately slide towards 79,500, and then gradually we will approach towards 79,000 odd levels. So this would be a decisive zone. If Sensex falls below this zone, then we might see a sharp sell off coming in. So now let's talk from the perspective of PCR. Overall, it is one which is bullish to positive, and then PCR at the money is also 0.76, and majorly this is coming because of these open interest positions that have alone been taken today. So now let's talk from the perspective of Bank Nifty. So Bank Nifty from lot of days had been trading negative. There is some sell-off that we had seen at the higher levels, and today as well, Bank Nifty opened in fact positively and was just tad towards the 56,000 odd levels. And then we saw sell off coming in, and this sell off continued, and it just barely closed above the sorry, it closed below the previous day's closing. So this suggests that again there would be a sell off that would continue from here on. So as long as bank nifty trades below 55,200 odd levels, then it is a confirmation for us that we can start taking the short positions in the bank nifty, at least for a weeks to 2 weeks time zone. So as long as the news on war subsides, it is no there is no point for us to go longs and take positions which are towards the positivity. So at all the higher levels, there is good scope for us to take short positions, be it at 56,000 levels, at 56,500 or 57,000 odd levels. So for at least a week or 2 weeks time, our expectation is that we on the downside would see some consolidation, and then if that breaks, maybe 54,500 odd level breaks, then we might see some sharp spikes coming in on the downside. So till this level, we have to remain cautious. Might be we might trade maybe in the tight range bound of 800 odd points, and once that gets broken out on the downside, then we will further see good pressure coming in, and then the sell-off would continue for another maybe 1,000 odd points until 53,000 odd levels for me, sorry, at least for a week's time, because bank nifty is trades on a monthly expiry basis, right? Yeah. So now let's look from the perspective of open interest. So open interest, we have had good positions that were built on the bank nifty at 55,500 odd levels, but there seems to be some positions that were written down. So as you could see, and even on the call side at 55,000 levels, some positions were written down. However, if you see, roughly around 10 to 20% of positions have got added at the higher levels of 56,000 and then 57,000. So these levels would be right for us to take short positions and hold it off for a week's time. So once the news surfaces out, if there is any positivity, we can maybe either cut down our positions or maybe take put positions at the very low levels, roughly around 52,000 or 51,000 odd levels. So may not be until unless there is a very big decision that is being taken and it is translating into a big escalation and war, only then we might see a sharp downfall that is expected to come. Unless that happens, we might trade range bound or might see sharp fall down by 1,000 points in a day or two, and then there would be a slight recovery of 400 to 500 points. So this is how the market is expected to trade. So for the immediate support, we have at 55,000 levels, and then the next support is at 54,000 levels, and at every 500 points we see good support coming in on the bank nifty. So on PCR front it is zero point 0.9, and then at the money it is 0.96, which is overall positive. On the FinNifty, so we had been updating this in our channel as well as in our market vision videos on daily basis. There is some selling pressure that we had been seeing in FinNifty for a very long time. So if you could see from almost 5 trading sessions, it is not able to cross or move on the higher levels. So today, in fact, it showed some strength at the opening. However, that strength was immediately turned down, and there was a selling pressure that had come up at the higher levels of 26,400 plus. So now we have closed at 26,200 odd levels. There had already been 200 points that got shaved off during the trading day. So this suggests that there is a negativity that has already built up. There was already a negativity on FINNIFTY, and today's closing very clearly shows that there is some negative trends that could be seen in FINNIFTY. So the immediate support that we have is at this level. So once 25,700 odd levels is broken down, then we might see some sharp sell off that is expected to come in, and this sell off might continue until this zone, 24,800 to 25,000 odd levels. So we have roughly a 1,000 point movement that is expected. So initially, as we told, we might trade on a range bound scenario between 26,200 to 25,700 odd levels. So this 500 point we might trade. Once this gets broken down at 25,700 odd levels, then we might see sharp downfall coming in, and this might end up taking FINNIFTY down towards 25,000 odd levels too. So this was a previous resistance, now would act as a strong support. So let's see from the perspective of open interest. So on open interest, so today we had seen some built up that has already started, and then gradually at every higher level we see some open interest positions that are getting built. So here as well at 26,500 odd levels we have support 400, we have again support as well as resistance. But since FINNIFTY is unable to cross on the higher end, the immediate support and a very strong support for us is 26,000. As we discussed yesterday as well, if this support gets taken down, then we are headed towards 25,500 straight, since we do not have any immediate resistance coming in. So as you could see here, we have seen a good sell-off that had come in, or unwinding of positions at 25,000 strike. So what this suggests, that this definitely says that in the coming days we might see some sharp sell-off that is expected to come in, though not a very decisive or strong open interest positions are getting built on the call side. However, there is some hint that we are getting based on these trades that somewhere that negativity is getting built up on FINNIFTY, and this would take FINNIFTY down towards 25,500 odd levels in the initial stage. Now let's talk from the perspective of PCR. So PCR overall it is 0.9, and PCR at the money is 1.13. So majorly this could be because of these trades that got taken slightly today on the call writing side. Now lastly we will talk from the perspective of FII and DII investments. So on the index futures, FIIs have been holding short positions to the tune of 18,000. On stock futures, they are again continuing to remain bullish by holding 17.29 lakh contracts. So they have been long on stock futures for a very long period of time now, and this gets continued. On the call options, they are short by 18,000 odd contracts, and on put options again they are short by 46,000 odd contracts. So net FIIs are holding positive positions on index options to the tune of 28,000 open interest contracts, which is not decisively bullish, but yes, this can definitely give some momentum for tomorrow's trade. On the proprietary traders, they are mildly bearish on index futures with 2.7 K contracts. On stock futures, they are long mildly with 2.89 lakh contracts. On call options, they are bullish with 51,000 odd contracts. And on put options, again they are bullish as they are holding the shorts on the puts. So to the tune of 45,000 odd contracts they are short. So overall net if you see, proprietary traders as well are positive on index options with almost 96,000 odd contracts. Now let's talk from the perspective of client. So client or retail trader is short on index futures by 23,000 contracts. On stock futures, they are continuing to be long with 16.39 lakh contracts. And on index options, they are net short by 78,640 contracts. So both FIIs as well as DIIs, or sorry, clients are long, and then proprietary traders are long, and then client is short by 78,000 contracts. So though overall the negativity is being seen on the charts on almost all the indices, so we might expect that the downtrend on the indices would continue for tomorrow. So overall on the cash position side, domestic institutional investors are long with 1,369 crores investments made alone today, as well as FIIs have also been taken investments to the tune of 2,386 crore in the cash market. So as we tell that if both FIIs as well as DIIs are continuing to remain positive, there is no point for us to be so much aggressive and take short positions. So as long as the charts do not turn around and the positions on both the FIIs and DIIs do not turn to negative, till then we can hold our long positions, or maybe be slightly bearish on the overall indices. So this suggests that we might trade in a range bound or consolidation scenario until something big news that comes in which might shake the markets. So till then, traders should stay nimble and wait for breakouts or breakdowns that are expected to be seen likely soon. So that's it on the FII and DII positions. So if you found this video useful, smash the like button and share your views in the comments. Tell us where do you think the Nifty is headed towards for the coming week. So until then, trade cautiously and see you tomorrow for tomorrow's trading session.
Na festa do fim de semana, só rolê bom. Ela chega e desencana com passo bem show. Na festa do fim de semana, só rolê bom. Ela chega e desencana com passo bem show. Na festa do fim de semana, só rolê bom. Ela chega e desencana com passo bem show. Na festa do fim de semana, só rolê bom. Ela chega e desencana com passo bem show.
Hello folks, welcome back again to our channel. There are two main reasons to make this video today. Number one, to share the trading performance of investment advisors for the 6 months of financial year 2022-23. And number two, is stock markets worth it and should everyone invest in it? Let me talk about second topic first and then take you through our trading performance. There is a lot of euphoria and buzz around stock markets on social media, especially from the younger generation people who are just fresh to start their careers. Since they have risk-taking capacity, they want to test the markets and get a feel of it. There are a lot of people reaching us out to know, can they switch to markets as full-time career? And few others want to do it part-time along with their business or job, because they are little skeptical and do not want to risk both time and money? The answer for both the questions is yes. But again, you have to put a lot of efforts in research and study on stock market behavior, because markets is all about psychology, discipline, and patience to wait for your investment ideas to reap your returns. Again, there is nothing wrong with job as such, as it gives you decent cash flows each month, and prudent savings will help you build assets. However, right investment in stock markets helps you build generational wealth, provided you are disciplined and patient for long-term investment. Investments in Indian companies now is really worth it, and everyone should invest, because India is bound to grow multifold in next 10 to 20 years. Disclaimer here, this is again our view. Well, are you still doubtful? To get further insights and proofs, we are excited to share our trading performance for the 6 months of financial year 22-23. Let me take you through the trading dashboard. Here you see we have 6 months of performance that is tracked. If you see here on the total P&L, we have made close to 40 lakhs, and this 40 lakhs was made on the capital of 2 crore 5 lakhs. So our total return comes to around 20%, and the total wins for us were 17 versus loss of 9. The total risk to reward is 1 is to 1.52. Not bad though. So if you see here, we have total of 26 weekly expiries for which we have traded. Let me take you through the performance on month basis. For the April month performance, if you see, for first weekly expiry, there was nil profit or loss. However, for the rest 3 weeks, we have made close to 17.53 lakh as profits, which is awesome, because the returns that you see is 8.55%, though we target for 4% returns on monthly basis. Then moving on to May month. May month again had 4 weekly expiries. If you see, of which 2 weekly expiries we had made losses, and then next 2 weekly expiries there was great amount of profit. That is when you see 8,11,000 profit was made. The total return was 3.96. Whatever we had targeted or aimed for as 4%, we were able to achieve it. Moving on to June month, we had 5 weekly expiries, and then of which 4 weekly expiries had profit and 1 weekly expiry had good amount of loss. Despite this huge loss, still we were able to make 8,73,000 as profit, which comes to around 4.26%. Then moving on to July month, again we had 4 weekly expiries. The first weekly expiry itself was loss for us, and then the second weekly expiry we were able to make profit of around 4 lakhs. However, again on third week and fourth week we had minimum losses, since we had loss in the first month, which was more. That is when our loss for the month of July was around 2,29,000, which was negative 1.12% in terms of returns. Then moving on to August month. August month again we had 4 weekly expiries, of which 3 weekly expiries we were able to make profit, and 1 weekly expiry there was a loss. And total profit for the entire month of August was 7,81,000. I would say not bad, because we were just off by 0.2% based on our targeted return of 4%. Then comes the last month, September. September again we had 5 weekly expiries. The first 4 weeks was really exciting for us, because we were able to make decent profits, and then last month we had huge loss. That is because market had suddenly fallen. Maybe we will be able to share you how the entire month's trading had been, or maybe the entire 6 months trading had been. That way you will be able to understand. But despite that, we were not in loss, we were in minuscule profit of 6,000. So of the 6 months, only 1 month we were in loss, that is month of July. Rest all other 6 months we were profitable. So this gives a overall picture of how our entire 6 months trading performance had been. Though I mean we were targeting for 4% of returns each month, our entire returns had to be 24%, but we were not able to achieve it. That's okay. We will have to consider trading as a business, and then that is how we will have to target wherever we could not be able to achieve the performance based on the targeted performance. We should try to make or overachieve in the next upcoming months. So for us, rest 6 months performance is also important, because whatever we could not achieve it in these 6 months, we will target to achieve there. So if you see, 40 lakhs is again not a bad profit, I would say, considering the fact that on this particular capital, 20% over a period of 6 months is definitely good. We are targeting anywhere to achieve around 1 crore towards the entire year, or maybe the end of 6 months. So for that, from 4% of targeted returns, we will have to increase it slightly to 5%. Only then we will be able to achieve this target of 60 lakhs profit in the rest 6 months, for us to make 1 crore as annual profit. So not sure whether we will be able to make this profit or not, but however, yes, we will definitely target to achieve it, and we will definitely share how our performance would be over a period of next 6 months. So stay tuned with us. Meanwhile, if you would like to join us, please reach us out on our website www.investingadvisors.com. We are into consulting, advisory, trading, and training. I'm happy to share, compared to previous year, now we have 50 plus HNI traders who trade using our strategies. The assets managed by our HNI traders in their self portfolio accounts is crossed 19 crores, and we are aiming to reach 50 crores in next 5 years. You can opt our model strategies on options, on futures, currencies, and robo advisory. For further more details, you can reach us out, contact us here, and someone will get back to you. Thank you.
Hello viewers, welcome back again to our channel Investing Advisors. I'm sure you all would have seen the teaser released on the March month performance review. If not, this is the video you should surely watch. With the start of new year 2021, we started series of videos that gives a glimpse of the trading strategies we deploy, and outcome of the same is reviewed each month as performance check. So, in the month of March, we traded mostly in Bank Nifty options. And let me tell you, this was the very tough month for option sellers, as Bank Nifty consolidated with broader swings, which had been very difficult to manage positions. Yet, we were able to make 10 lakhs profit for the month. Now, speaking on the strategy, we deployed only strangles and straddles each weekly expiry and throughout the month. But the best part of it was, we were very closely following the price action to make necessary adjustments, as and when needed, which had resulted in maximizing the profit. The another very important aspect which we would like to bring to the table is money management and position sizing. These will save you when market makes unexpected swings. For better clarity, let's quickly go through the chart. The green line that you see is marked as resistance and red line being support for the month. The dashed lines are weekly expiry series days for the month of March. As I mentioned earlier, Bank Nifty consolidated the entire month in the range of 4,000 points, which is roughly 8 to 10% swing. For better understanding, I have split the entire month in each weekly expiry. Let's discuss one by one. Bank Nifty started March series with bearish view and the entire month continued with same trend. In first week, we sold far out of the money options covering 2000 points from 34,800 call option to 36,700 call option. However, as VIX was high, the premiums were lucrative, and with small movements, we made adjustments with deploying put options in every 200 point range. This had led to a awesome profit of 4.5 lakhs for the week. Moving to second week, the VIX had fallen, so the premiums had fallen too. We expected wild swings, but Bank Nifty moved just 1000 point range. But it recovered from the lows, so the positions we took were small in size, and so the profit was just 1 lakh for the week. Now, in the third week, we expected Bank Nifty to be range bound, and accordingly we had taken positions with 1200 point range. But each day in the entire week, markets kept falling. Though we made good profit on call options and Bank Nifty had shown some sign of recovery on the expiry day, but towards 2 p.m. there was selling pressure, due to which we could not make adjustments as the premiums were low and ended in loss with 71k. But the lesson here is, when you lose, it should be small, and when you gain, it should be big. Now, again in fourth week, markets continued downtrend trajectory, for which we were already prepared and had taken positions accordingly. We sold options with 2000 point range, having positions in every 200 strike points, and hence there were many positions that we had held on each of the strikes, giving us a decent profit of 1.95 lakh. Now, coming to last week of March, though the series expiry was falling on April 1st, which comes in new financial year, still we took positions and had taken into account in March series itself. Bank Nifty had touched the support zone on 25th March and revived from there. Hence the expectation was to close higher from the support zones. So we had taken positions in 3000 point range in both call and put options, making the necessary adjustments along the movement of the market. We were able to make handsome returns of 3.5 lakhs for the week. Though Bank Nifty moved downward with 4000 point range for the entire month, still we were able to make 10 lakhs profit out of it. This is the beauty of trading in derivatives. And it was all possible because we do not focus on target ranges and movements, rather take positions based on price action. With this, we come to an end with the performance review for March month. To get regular market updates, kindly follow InvestWink Advisors on Twitter Yahoo, LinkedIn, Facebook, Instagram, and Telegram channel. Thanks for watching the video. If you liked, do share and subscribe to this channel. Thank you.
Hello viewers, I'm Siti Agarwal. Welcome to Investment Advisors channel. Today we are going to discuss on a very important topic, which is that why do retailers lose money in the stock market? So did you know that 95% of the retailers lose money? If you have been trading in the stock market as well, then you might relate with these 3 points that I'm going to present. First one being herd mentality. So most of us initially start with the buy recommendations given by our friends, family, or someone from social media. Without proper knowledge, most of the retailers jump to buy the stocks even without knowing that what does the company do. Secondly, lack of patience. This is pretty common. Retailers make this mistake pretty often after knowing that everything takes its own sweet time to show results. Third one being wrong entry and exit points. This is somewhat related to the first 2 points that I talked about, because when a retailer does not know how does the stock market actually work like, or does not do their own research, they might just end up buying the stock near its top, and when the smart money actually exits the stock, the retailer panic sells and sells the stock and basically loses the money. So this chart actually talks about the different phases that a stock goes through. So there is not any set time limit to how long the market cycle could be, but usually it is taken as that a cycle could be of 4 to 5 years. So firstly, there is a stealth phase in which the smart money starts to accumulate the stock. Secondly, there is an awareness phase in which the institutional investor starts to accumulate. This might also include the bear traps. Thirdly, there is a mania phase. Mania phase includes media attention, enthusiasm, greed, delusion, and public attention, as to which when the public tries and buys the stock. Lastly, we have the blow-off phase, when the smart money exits and the public then panic sells, as I talked about in the third point of the previous slide. There are 3 points that I'm going to cover with this slide. First one being the patient capital. So patient capital is for those investors who want to invest for the long term without the view of making a quick buck out of the stock market. These patient capital owners do not want to do have a purview of investing for the long term and do not exit the stock probably for 3 to 5 years. Secondly, we have power of compounding. Power of compounding basically means that the money that is that you have profited from is being reinvested in the stock. So that money can also be the dividend or the profits that you gain from the stock. Thirdly, we have the market cycle. So the market cycle is basically the chart that is being shown in the right side. There are 3 phases that a stock goes through. That it can be a bull market, bear market, and a consolidation. Lastly, so it is advised to start slow and start small. Secondly, take advice from a professional or someone who knows about the stock market. Thirdly, keep it simple. Only invest in the funds or only invest in the instruments that you understand and that you can relate or actually is pertinent to the long-term goals that you have. It could be for retirement funds, or it could be your education funds, or anything else. Fourth point, SIPs. So mutual funds have 2 offers. One is the lump sum, or secondly is SIPs. So SIPs is one of the go-to instrument that I would recommend, which basically actually avoids you to invest all the money in probably over here where the stock is at its peak. It distributes your money overall of the market cycle and allows you to maximize your return. Lastly, ETFs. ETFs are the exchange traded funds. This is the most safe bet, I would say, if you want to venture into investing on your own. ETFs basically invest into the index funds, indexes like the Nifty, Bank Nifty, Nifty IT, etc. So Nifty has, in the past, Nifty has given 8 to 10% of return, which is considered to be good if a person is not managing or not actively trading into the stock market. Also, uh, ETFs are traded on the exchange, so these are far more liquid as compared to SIPs. So friends, beware of the unsolicited stock tips that we receive. So invest with a view of growing your funds and do not come into the trap of any trade market guru or any stock tip advisor. Happy investing. Thank you. Hello everyone, I'm Stuti Agarwal and welcome to Investing Advisors channel. So a lot of my friends have been asking me about how to trade in derivatives and how to go about it. So in this video, I will be talking about setting your foot in derivatives trading. So let's begin. So in Indian markets, you can trade on three types of derivatives. One is equity, then is commodity, and the third one is the currency. So derivatives basically derive its value from the underlying assets. So let's suppose if I'm buying the call or the put option of Reliance, then the value of it would be derived from the stock price of Reliance. So derivatives could be traded through two instruments. One is the futures and the other one is the options. These are traded on the exchange. So options basically consist of call option and a put option. So call option is denoted by CE, which is call option European style, and the put option is denoted by EE, which means put option European style. So, there are two styles of options that are available. So in India, we follow the European style of options. A European style of option basically means that you cannot exercise the contract before its expiration. By exercising, I mean it is meant that the contract cannot be closed before its expiration. So call option basically means that when the stock price is going up, the call option's price would also go up. But when the stock price is falling, the put option's price would go up, and vice versa. So premium of the option is basically derived by three values. One is the intrinsic value, plus the time value, and plus the volatility value. For the intrinsic value is basically calculated as spot price minus the strike price. So over here, I have Bank Nifty price, which is at 35,810. 35,810 over here is considered as the spot price. And over here, I have a contract which is for Bank Nifty, August expiry, which is this month's end date, and 36,000 is the strike price, and this is a call option. This is priced at 565. So 565 is basically the premium of the contract. So over here, as strike price is more than the spot price, this is a OTM option, which is out of the money. So if option is out of the money, it basically means that so there is like no intrinsic value for this. The premium is only consists of the time value and the volatility value. You can understand more about this from this slide. This is the classification of the types of strike prices. So basically there are three types. First one is out of the money. As I talked about this snapshot, this contract is basically out of the money strike price. So basically at the time of expiration, out of the money contracts expire worthless with value of 0, as the strike price is more than spot price. So the intrinsic value is not there, and the buyer is basically losing on the time value and the volatility value. It is cheaper than the ITM option as there is no intrinsic value which is present. ATM option or at the money option. ATM option also expires worthless as the strike price is equal to the spot price. So if you subtract both of them, the value comes as 0. It is also cheaper than ITM as there is no intrinsic value which is present. It only consists of the time value and the volatility value. The third one is the in the money option. So in the money option, at the time of expiry, you will get the intrinsic value, which is the spot price minus the strike price. Over here, the strike price is lesser than the spot price, and it is expensive as compared to the other two types of strike prices, which is the OTM and the ATM. Since the intrinsic value is also present along with the time value and the volatility value. So I took this chart from the NSE website. This is called the option chain. Basically, these are the different strike prices at which Nifty is available. And this is the spot price which is given, which is 16 to 40. The one which is highlighted in pink are the ITM options for on the call side. And on the right side, we have the put options. And the one which is highlighted in pink is the in the money options for the put side. So lastly, coming on how do traders profit from? There are two sides of it. Either you can buy the option or you can sell the option. Selling is also known as writing the option. Buyers of the option basically want the option to expire in the money at the time of expiration because they would be gaining on the intrinsic value of the option. And the sellers of the option want the option to expire worthless and come down to 0. So I want you to remember these 2 points, which is that option buyers have limited losses and unlimited profit, and option sellers have unlimited losses and limited profit. So this is a small example that I've taken. It is based on the snapshot that we saw on the first slide. So as the premium was given as 565 and strike price was the strike price that we bought was 36,000 call for Bank Nifty. You can ignore the spot price right now, which is 35,800. So these are the different scenarios which are given for Bank Nifty, Bank Nifty's expiration. So if the Bank Nifty expires at 35,100 on the last date, which is on the expiry, so you would be losing 565, which is the premium amount. So as I talked about, that option buyers have limited losses. So the premium amount is the only loss that you would incur and not more than that. So till the point of the strike price that you have, which is of 36,000, you would be losing 565, which is the amount of the premium. Over it, like if you go above it, which is 36,100, you would subtract the premium amount plus the spot price minus the strike price. So this is a golden formula that you should remember, that the spot price minus strike price minus the premium would be your profit or loss. So to come to the break-even point, you want the Bank Nifty 600 points over your strike price, which is that Bank Nifty should expire at 36,600 for you to give a break-even point. So that's it for this video. I hope that you liked it. If you liked it, do give it a thumbs up and share it with all your friends. And we would be coming with more such videos for you to understand more about trading and more about investing. So happy investing. Thank you so much.
Hey traders and investors, welcome back to the channel of Investing Advisors. In this Market Vision series, we discuss about how markets is expected to perform and how one should trade. So without wasting any time, let's dive right in. The Indian markets was on fire today. We saw a strong rally in the major indices. Nifty surged to 89 points, roughly around 1.2%. It was a solid bullish move. Sensex on the other hand jumped 1005 points, around 1.27%, showing strong buying interest. After recent consolidation, the bulls are back in control. Let's look at the sectors who's leading. Oil and gas gained 3.18% due to crude oil price movements and expectations of strong earnings. PSU banks as well jumped 2.44% due to improved reforms and better NPA outlook. Healthcare and pharma sector climbed 2% due to defensive buying interest. Infra stocks also saw 2% uprise due to increase in the government spending push. Auto sector too gained 1.68% after the big downfall and increase in the demand hopes. There is a clear sector rotation that is happening. Value buying is emerging in PSUs and oil sector, while pharma sees safe haven demand. Lastly, global markets seemed muted. US markets overall was tepid. Dow Jones fell 0.11%, S&P was down 0.5%, and Nasdaq saw a pressure from tech stocks sell-off, that is when it was down 1%. European markets on the other hand were mixed. DAX climbed 1.7%, CAC was up 0.5%. However, FTSE remained flat. Asian markets also seemed tepid. Nikkei was up 0.38%, Shanghai was down 0.2%, and Hang Seng remained flat. While Indian markets shined, global markets were cautious. So there seems to be a Fed worry and earnings season that is keeping the traders on edge. Now let's discuss from charts as well as open interest what the market suggests for tomorrow's trade. So we are in the Nifty chart. So yesterday we had discussed that market had given a big downfall and we would have a strong support at this level. So market towards the mid of the day had recovered from this level, and roughly there was a retracement of around 40%. Now, since yesterday there was a news that Indian Army has taken off the INS Vikrant and the sea related warships back to our zone, that is when there seemed to be a positive news, and then market suddenly rallied today, and it has exactly closed where from where it started consolidating. So this range again becomes a crucial thing, 24,400 odd levels. Once Nifty crosses this level, then immediately we would approach 24,800 levels um, as the first resistance, and then we might stay for some time in this range, and then once Nifty breaks out on higher side beyond 24,800 odd levels, we would see a swift up move coming in. So we have to be cautious until 24,800 odd levels. So if there doesn't come any bad news of the war kind of situation, then we are definitely expected to uh, gradually move towards the higher levels of 24,800 odd levels just in a week's time, with the start of the May month. And then if no negative news comes in, then we will start climbing on the upper side. So overall, on the downside, we have to have a close stop loss somewhere around at 23,800 odd levels, from where we saw this reversal and a big up move that we could see today. On the higher side, we have to be cautious, somewhere around 24,800 odd levels. Once this up move is easily taken off, then we might see a swift rally on the higher side coming in, which can lead towards 25,500 to 26,000 odd levels. So this is surely not going to be quick. So we might spend some time here until we gradually cross 25,200, and then next would be 25,800 to 26,000 odd levels. So week by week we have to see if there is a selling pressure on the higher side, or there is more buying momentum and support that create gets created at every higher level once the nifty moves. So if that is the case, then we have to keep tracking closely on the higher highs that nifty is expected to take, and then accordingly take all the positions majorly towards the long, with the strict stop loss bias of around 23,800 odd levels. So this is what chart suggests as of now. So let's see from tomorrow's trading perspective how the market is expected to do. So as long as it opens on the higher side and trades above this zone of 24,300 odd levels, then we might take only positive trades. If nifty starts trading below, or maybe comes in this particular range, then we have to be cautious and not take any maybe long trades. So it is expected to remain maybe volatile until there is a clear indication of either a long side or short side. Now let's look from the perspective of open interest. So on open interest too, we see the tight range bound is expected to uh, be there. So nifty is expected to trade in the range of 24,000 to 24,500 odd levels. Once we cross beyond 24,500 odd levels, since there is no immediate strong resistance, we might swiftly move towards 25,000 levels too. So even the charts very clearly indicates that, and then until the 30th expiry, which is just 2 days away, also expects the same thing. So we might maybe trade range bound tomorrow, and then post that we might see a significant rally coming in, either on the upside or maybe on the downside. On the downside, at every 100 points level, we see a good support coming in. On the higher side, there is only one support at around level of 24,500 coming in from the call writers. Beyond that, there is no significant open interest positions, and we might straight move towards 25,000 odd levels. So on the last week expiry, that is on 30th April, we might see a good volatility that is expected to come in, because markets overall had traded in certain range of 24,000 odd levels till 24,500 previously. Now if it breaks, it has to break either side. So it was unable to maybe break down below 24,000 odd levels on closing basis. So now it will try to target and move on the upper side. If there is no resistance that comes in, then we might cross beyond 24,500 odd levels on closing basis. Once that happens, then be ready for the upper side movement to come in until 25,000 odd levels till 30th April expiry, and then accordingly how the open interest positions get built for 8th May, we will see. So overall on PCR, it is 1.2, which is positive. At the money as well, it is 0.85. Again, this is quite positive. Now let's talk from the perspective of Sensex. So we saw a strong bullishness that has been seen in this candle. So it has almost covered the previous day's candle. So it is expected to be positive from here on. So yesterday we had discussed that this is the first support that Sensex is expected to take, and then it exactly did the same. Came here, took a support at around 78,800 odd levels, immediately moved on the higher side, and today opened gap up, and then from this it started continued trading on the higher side. So there is good positivity that can be expected in Sensex. Tomorrow being the expiry for Sensex, we might see some volatility coming in, but from the open interest perspective, when we see, we will get a clear indication as to how the markets is expected to behave. So looking from the charts perspective, this close as of today is quite bullish and positive. So from here on, the immediate resistance that Sensex is expected to have is at 82,000 odd levels. So till then it is a clear biased upward movement that can happen until 82,000 odd levels. So once tomorrow Sensex crosses above 80,200, if it opens and sustains and trades above 80,200 odd levels, and even the close happens as roughly around 80,400 to 500 odd levels, then that should be considered as positive, because 2 consecutive days, despite the lot of sensitive news flowing around because of Pahalgam war, and maybe some firing happening between India and Pakistan. Despite that, if markets are trading on a positive note, then we have to take bullish moves as long as Sensex sustains 78,800 odd levels. The moment this zone, Sensex comes in and breaks below 78,800 odd levels, we have to cut all our long positions and start taking trades, for the on the short side. So this is what is the trade action that we have to take. Now let's see from the perspective of open interest. So on the lower side, so we at every 500 points, and in between at all the 100 point levels, we see good buying interest or momentum that had built today. And at every lower levels we see strong support coming in. If you see at 79,500 odd levels, and then even at 79,000 levels. So tomorrow we might not see any downfall that is expected to be seen in Sensex. Rather we would trade and close above 80,000 odd levels itself. So now the immediate resistance that we can see is at 80,500 odd levels, which if the Sensex remains quite bullish and positive, can also be taken down and might approach towards 81,000 odd levels too, because once 80,500 odd levels is taken down, we do not have a strong resistance from the call riders. So easily Sensex can move towards 81,000 odd levels. So if we have to talk from the perspective of tomorrow's trade range, then 81,000 to 79,800 is what we are expected to trade in. So overall, we might trade in the range of 80,000 to 80,500 as well, or if 500 is taken down, then we might approach towards 81,000 odd levels. So overall, on PCR we see 1 which is positive, and even at the money it is 0.77 which is positive. So from the perspective of tomorrow's expiry, already since there had been a volatility in Sensex as well as in the major indices, so we might see not much big moves that are expected to come in, at least for tomorrow's expiry, given the simple fact that the VIX is on the higher side. So whenever VIX is high, option writers will enter into, and they will try to eat up the maximum premium that they can collect. So if the volatility comes in, then it becomes really difficult for them also to manage their positions. So we might see a calm or composed kind of trade movements that would be seen tomorrow. So expect range bound trade in between 79,800 odd levels to 80,500 odd levels in the initial stage. If 80,500 breaks, we might approach towards 600, 700, and gradually toward crossing 80,800 odd levels too. So this is what is the tight range in which Sensex is expected to trade tomorrow for the expiry. Now let's talk from the perspective of Bank Nifty. Even Bank Nifty had almost covered this previous day's overall candle. So Bank Nifty also had closed on a positive note. So for us, the first resistance for Bank Nifty is around 56,000 or maybe 55,800 odd levels, because this is the zone from where we did not maybe in the initial stage did not touch 56,000 levels, but later we touched 56,000 levels and then suddenly um, saw a big downfall coming in, right? So now our first resistance would be 55,800 odd levels, from where we started seeing that selling pressure coming in, and then roughly around, there was a fall of 1800 points from the top of 56,000 odd levels, and then we saw a swift recovery coming in just in 3 days time period. And this close of today is quite bullish and positive. So if uh, bank nifty tomorrow starts trading above 55,400 odd levels, then it is considered as positive and we will quickly move towards 55,800 odd levels. Once this gets crossed, then easily we might again cross the all-time highs of 56,000 and above levels on bank nifty. On the lower side, this is what is the resistance that we will have to keep as of now, roughly around 54,500 odd levels. The moment bank nifty starts negatively trading and falls below 54,500 odd levels, that is the first indication for us to be cautious and exit all our long positions and start taking the short positions or sell call kind of positions. So as long as bank nifty trades above 54,500 odd levels, there is not much to worry. Of course, yes, there is a news that is lingering around the war kind of situation between India and Pakistan. That might happen, but if that is expected to happen, we can very clearly see that on charts. So that is when presently the charts have been showing all the bullishness. So we have to see what the charts suggest and take trades accordingly, and not have uh, some expectations about the downfall that you expect maybe any of the indices to come in. uh, Traders should not trade that way. So whatever you see on the screen, just go ahead with that. So as long as the chart on bank nifty is concerned, it is closed quite positive and bullish. So we should take the trades, positive trades, if nifty starts tomorrow trading beyond 55,400 odd levels. So once that is done, it can easily first approach 55,800 odd levels and then cross even 56,000 levels to hit all time highs. Now let's look from the perspective of open interest. So as you could see, at 55,000 odd levels, we see strong support from the put writers, and also at 55,500 odd levels, there is a good support from both put writers, and there is also a selling pressure from the call writers, acting that as a strong resistance. But yes, once bank nifty crosses 55,500 odd levels, as you could see, there is no single big resistance that is there. So we might easily approach 56,000 levels and beyond. But on the other side, if you look at downside, you have a strong support at 54,000 out levels, then you have again at 53,500, and a very big support is there at 53,000 odd levels. So at least for the uh, May month expiry, 53,000 remains the crucial zone for bank nifty. Below this zone, that means there is a negative scenario that has that is expected to be seen in bank nifty. So if for the entire month 53,000 is held, that means we are positive and should trade for the long side. So now presently if we see, since bank nifty has a monthly expiry, so we just have to follow the charts as well as see the open interest movements on daily basis, and then take accordingly the um, trades on the bank nifty. So for now the trades suggests positive, and once 56,000 odd levels is crossed, there is no immediate resistance, so we might continue to rally further too. On the PCR front, overall it is 1, and at the money it is 1.02, so which is quite bullish to positive. Lastly, on FinNifty. So FinNifty had been, little, we had seen little sell-off coming in at the higher levels, and then this consolidation or sell-off continued for 3 days, and today we saw a good, buying momentum, though it did not close above the previous day's close. So that means that there is some pessimism or negativity that is, expected to be seen in FinNifty. So once FinNifty crosses, this level of 26,600 odd levels, then we might, consider that the bearishness on Nifty has subsided, and we can start taking the positive trades and, remain on the long side for FinNifty. So until this zone, we have to trade cautiously. We might, trade range bound, but there are high possibilities that we might start trading below 26,000 odd levels. So for us, the immediate support is 26,000. Once Nifty starts trading below this, the next immediate support would be 25,700 odd levels. And then if it is unable to sustain, then we might see a big downfall coming in, and we might even cross below these levels of 25,000 odd. So FinNifty is not that, showing the bullish signs. So until charts clearly indicate on the long side, we will have to be cautious on FinNifty. So as long as we start trading above 26,500 odd levels and touch towards 26,700 odd levels, we will continue to trade in the range bound scenario. So either on the upper side or downside, once it takes a decisive move, from there on we can start taking the positions accordingly. So compared to other indices, somewhere there is still the weakness continues on FinNifty. Now let's look from the perspective of open interest. So there is a strong support at 26,000 levels for FinNifty. And then on the higher side, yes, there is resistance at 26,500, and there is a another resistance at 27,000 odd levels. But yes, these may not be as strong that we could see on the put side. So put writers have been holding very confidently at 26,000 odd levels, which is roughly 300 points down, right? Despite kind of uh, weak scenarios or volatile kind of scenarios, still the put writers have been holding very firmly at 26,000 levels. So that means our immediate support should be 26,000. Once FinNifty gets broken below 26,000 odd levels, wait for 25,800 to break. Once it breaks, then we might start taking the um, short positions on FinNifty. So from the perspective of PCR, it is 5.5, which is quite bullish, and this is majorly coming because of the very closer strikes, majorly because of 26,000 strike is what we could see higher PCR. At the money, it is 1.13, which is again quite positive. So though on the charts, FinNifty that doesn't seem to be quite strong, but on the open interest perspective, 26,000 levels holds, or gives a firm indication that FinNifty may not uh, drop below 26,000, at least in the initial stage. So till then we will trade cautiously in FinNifty and give a strict stop of 25,800 odd levels. So once that gets broken, only then we will take short positions. On long side also we have to remain cautious, because any point in time we might see a downfall coming in. Now let's talk from the perspective of FII and DII data. So FIIs on the index futures have been holding short positions to the tune of 23,000 contracts. On stock futures they have added more, and net they are holding 17.32 lakh contracts, which is quite bullish and positive. On call options they are long by 45,000 contracts. On put options they are short by 37,000 contracts. So net FIIs are long on index options to the tune of 81,685 contracts, which is quite positive. On proprietary traders, on index futures, they are mildly bearish. On stock futures, they are holding minimal positions to the tune of 3 lakh contracts. On call options, they are massively long with 1.05 lakh contracts, and on put options, roughly 60% of the call positions they have been trading on the short side. So net um, even FIIs are long, because if they are expect if they on put side they have taken short positions, that means they expect the markets to trade positively. So even proprietary traders are bullish to the tune of 1.66 lakh contracts. Now talking from the perspective of uh, client. So on index futures, they are mildly short with 27,000 odd contracts. Um, on stock futures, they are long with 16.3 lakh contracts. On call options, they are massively short with 1.5 lakh contracts, and on put options, they are long by 47,000 contracts. So net retailers are short by 2 lakh contracts. On the other hand, both proprietary traders as well as FIIs are massively long. So whenever you see both FIIs and proprietary traders are long, and DI clients or retailer traders are short, that means that we might see positive trend coming in, and the gainers would majority of the times be FIIs and proprietary traders in their view, because they are the market makers. That is when they can move the market to gain for their positions. So overall we have to see how the expiry is expected to happen both on Sensex tomorrow, and then next day, Wednesday, on Nifty. So on the stocks perspective, in cash market, DIIs have invested 2,818 crores, and FIIs have also invested or taken long positions for 2,474 contracts. Sorry, crores. So as long as you see either of the institutions are positive and have been able to absorb the negativity of the other institutions, till that time we can expect the trend to continue on the positive end. Now today you see both FIIs as well as DIIs have been long despite the bad news that has been circulating. Still they have been continuing to buy in the cash market as well as in the options as well as in the futures. So that is a clear indication that markets are poised to move up, and when it starts moving up it would give a sharp rally on the upside. So this is a very clear indication. So that is when we always tell, trade what you see on the screen and not what your um, expectations are towards the market. So there would be a lot of news that would divert your mind or your insights towards the market. Just watch the screen and it will give you a clear indication as to where it is headed towards moving. So key takeaways for today is India has been outperforming because of domestic liquidity as well as FII pumping in. Also there is an earning season which seems to be optimistic. That is also one of the reason why the markets are being driven on the higher side. So that's it for today. If you liked our insights and the way how we analyze the market, and if you enjoyed this video, please smash the like button, subscribe for our market vision series, and hit the bell icon so that you never miss a market update from our end. So thanks again to watch our video. Please give a thumbs up if you really like, so that we get motivated and do better day in day out for you. Till then, happy trading.
Hello everyone, I'm Stuti Agarwal and welcome to Investment Advisors channel. So in the last video, we talked about the basics of derivatives. So for this video, we wanted to go a little deeper into options. So to start trading in options, it is important to understand the Greeks so that you can determine if the premium is undervalued, overvalued, or rightly valued. So let's take a deeper dive into the factors that determine the value of an option premium. So these are the 5 types of option Greeks: delta, gamma, vega, theta, and rho. Delta is determined by the spot price and the strike price. Gamma is determined by the delta. Vega is determined by the volatility. Theta is determined by the time to maturity. And rho is determined by the rate of interest. We usually take rho as a constant value. An easy way to remember this is by the initial letters of these 3 with the corresponding. So coming on the first one, delta basically measures the change in the option price when the stock price moves. So over here, we have taken 2 scenarios into consideration, both for which the spot price is at 36,000. For the first one, the strike price is at 35,000. And for the second one, the strike price is at 36,500. For this one, the call option is ITM and the put option is OTM, and vice versa for the second scenario. So as you can notice over here that the delta value is different for both the call option and the put option. This basically means that with an increase of 1 rupee in the underlying, the call option would go up by this amount and the put option would go down by this amount. Positive delta sign basically denotes the positive correlation with the stock price. You can also notice the huge difference between the delta value of the ITM call option and the OTM call option, and same with the put option. So ITM options basically have a higher absolute delta value as compared to the ATM options and the OTM options. In conclusion, we can say that the OTM options have a delta value of less than 0.5, ATM options have a delta value of near about 0.5, and ITM options have a delta value of more than 0.5. Second one is gamma. Gamma basically measures the change in the delta when the stock price moves. So over here, we have taken the delta value and gamma value, which is 2 months before the expiry. And at this one, the delta and the gamma value is 1 day before the expiry. Notice the huge difference between the delta and the gamma values. Gamma is the highest at the money in both the cases. Gamma is the smallest for deep OTM and ITM options. Gamma is positive for long options and negative for the short options. Gamma is basically the difference between the delta values of different strike prices. The third one is vega. Vega basically measures the change in the option price when the volatility moves. This basically means that when the volatility increases by 1%, the call and the put options premium would go up with the amount of vega. So over here, we have taken the spot price as 36,000 and the strike price as 35,000. The vega value is same for the call option and the put option. This means that the value of the premium would go up by this amount, even if the underlying does not move. Then we have theta. Theta is the decay in option price every day as the expiration gets nearer. It is the option seller's best friend. It signifies the time value. Greater the time to expiration, larger is the theta value. So as we know that the premium of the option consists of the intrinsic value, time value, and the volatility value. Vega signifies the volatility value and theta signifies the time value. So the OTM options consist of only the time value and the volatility value. So if the option expires OTM, the volatility value and time value would also come down and eventually the option expires worthless. This is the option chain. So on the left, we have the call side and on the right side, we have the put side. These are the strike prices that we can trade on. This is a chart for Bank Nifty. So the LTP basically determines the premium amount that has to be paid. And as we know that the lot size for Bank Nifty is 25. So if we multiply the premium amount with 25, that would give us the minimum amount that can be traded. OI is the open interest, which basically means the open contracts in the market which have not been closed yet. This works on a cumulative basis. Change in the OI is basically the traded contracts in a day. So that's it for this video. If you like it, do give it a thumbs up and share it with your friends. And happy investing. Thank you for watching.
Hey all, welcome back again to the channel of Investment Advisors. As part of Market Vision series, in this video we will discuss how the global markets have performed last Friday and what is expected in Indian markets on Monday given the India and Pakistan clashes and firing across the line of control. Indian markets faced heavy selling pressure on Friday with Nifty and Sensex plunging sharply before a slight recovery. Nifty crashed 207 points, around 0.86%, closing just above the previous resistance levels of 23,800. Sensex as well nosedived 588 points, around 0.74%, ending tad above 79,200 levels. Despite strong global cues, continuous inflows from the FIIs, we saw selling pressure due to escalations in Jammu and Kashmir, India because of terrorism. On broader markets, most sectors bleed, except IT, which stood strong. Worst hit sectors were media, which crushed 3.24%, as there was selling pressure seen in entertainment and broadcasting stocks. Realty sector was also down by 2.8% due to weak demand despite the low interest rates. Pharma stocks as well drifted 2.24% due to profit booking after the recent rally. FMCG stocks too fell 0.62% due to slow rural demand concerns. The only gainer was IT, which jumped 0.72% due to weak rupee and strong earnings hopes that boosted the tech stocks. Global markets were green everywhere. While India struggled, US tech and European stocks gained. On the US market side, Nasdaq surged 1.26%, and this was primarily led by AI and tech stocks, which rallied hugely. S&P 500 on the other hand was up 0.74%, whereas Dow Jones remained flat because of mixed corporate earnings. On European markets, Germany's DAX climbed 0.81%, France CAC gained 0.45%, whereas UK's FTSE remained flat because of inflation worries that capped the gains. On Asian markets, Japan's Nikkei jumped 1.9% due to weak yen that boosted the exporters. Hang Seng was also up 0.32%, whereas Shanghai remained flat due to economic concerns that lingered. On commodities, gold and silver had shined. There was a good demand that boosted the precious metals, and even oil inched higher. WTI crude oil surged 0.37% and closed at $63.02 per barrel. Gold on the MCX had been trading near the all-time highs and closed at 99,265 rupees per 10 grams. Silver on the other hand jumped towards 1,12,000 rupees per kg due to industrial and investment demand. Now let's discuss from the perspective of charts as well as open interest to understand how the market is expected to open on Monday and then how on Monday it is expected to trade. So we are in the Nifty 50 chart. So as you could see that on last Thursday we had discussed that markets are going to trade in the range bound. So this is what is the range that we had discussed. And in fact on Friday we clearly told if this levels it goes below, then we will see immediate selling pressure coming in. Similarly, if the markets is expected to move higher above these levels, then it will surely spike on the upper end. So since there was already escalations and tensions between India and Pak war, that is when we suddenly drifted down, and the sell-off was towards the previous resistance level. So this is what was our previous resistance level. So you could see here the Nifty index touched towards those levels, and from there it bounced back slightly and closed somewhere around 24,040 odd levels. Now this is again closed at a weaker level, so we might expect further downfall to continue from here on for until next week, till all the escalations and war related issues subside. So till then we might not be inching or moving above 24,400 odd levels. So this is expected to remain a crucial zone until all these tensions or issues on war subsides. So the moment Nifty starts moving above this level, so this should remain our tight stop loss and we should immediately go long. So we might see sudden spikes coming in future, crossing even above 24,800 odd levels. So it is just a matter of the news and how maybe this war is going to get a shape. So until markets trade in this range, we do not have a worry. The moment the market starts trading below this level, be prepared for maybe at least 4 to 5% drawdown from here. So 23,800 levels is expected to remain crucial on the lower end, and on the higher side we have to closely track 24,024 odd levels. So once Nifty starts moving above these levels, then we will see sharp rally coming in on the upper side, which can even hit 24,800 to 25,000 odd levels, and then from there we can see the high rallies coming in. Now let's move on to open interest. So on Friday, since there was some escalation and tensions because of the firing and clashes between India and Pakistan, we saw a good selling pressure that had come in. Due to that, there was a huge built up in the open interest across the strikes on the call side. So this suggests that we are capped for the moment for the higher side. So 24,500 odd levels remains quite crucial as resistance. So as long as Nifty trades below 24,500 odd levels, we need not to worry. There are very low chances or expectations until April 30th we might move towards these levels. So that is when we could see roughly 60% of open interest positions here, around 40 to 50% of open interest positions had been built. So at every 100 level strike, you could see that there have been good sellers who have built up their positions, expecting that the markets may not move on the upper side. Rather, there would be a lot of selling pressure due to the kind of critical news that is around. So there is expected that India would also retaliate. So in this retaliation, there would be more chances of war type of scenario that is expected to get escalated. So if such kind of scenario happens, then we would soon see sharp sell off coming in, and we might start even closing below 24,000 odd levels. So 24,000 level again remains crucial. The next immediate support is 23,000 levels itself. So since there is no support that is coming in between, so we might see immediate sell off that might lead to 23,000 odd levels too, once 23,500 is taken down. So since we had already touched around 23,000 800 odd levels, and recovered swiftly from there and closed around 24,040 odd levels, so there are high possibilities that if the tensions escalate again, the next week itself we might suddenly seeing the crash coming in Nifty, and we might close even below 23,500 odd levels. So the immediate support is at 24,000. The next support comes at round figure 23,500, and the last support is at 23,000 odd levels. On PCR front, it is 0.7 overall and 0.63. So this is neutral to maybe bearish, I would say, given the kind of news that is getting circulated. Moving on to Sensex. So even Sensex touched towards those levels of, previous levels of resistance, around 78,800 odd levels or 500 odd levels. And then from there we, recovered roughly around 40% of the overall fall and closed around 79,200 odd levels. So it is a clear indication now, and even on Friday we discussed this, that this zone remains critical for Sensex. So if Sensex moves beyond 80,200 odd levels, then we might soon see the higher highs coming in. And we had also very clearly discussed that as long as Sensex is trading in this range, we might have a range bound kind of scenario. The moment it crosses this level on the lower end, then we might see a sudden selling pressure that is expected to come in. And the same thing had happened. In fact, on Friday we immediately saw the swift selling that had come up, and then towards mid of the day there was a recovery that had come in, and then we closed maybe at the 60%, sorry, 40% of the retracement of the overall fall. So even over the weekend there have been some clashes and firing that continued on both the sides, so that might add to some negative pressure at least on Monday. So be ready for the markets to maybe start drifting lower, and then we might see more escalations or pain coming in if there is a overall firing as well as scenario which turns into a war. So till then we are expected to trade in the range bound scenario of this, and then from there be ready. Once it closes below 78,800 odd levels, we will soon start seeing a big downfall coming in on Sensex. And on the higher side we have to closely watch 80,200 to 400 odd levels. Beyond that, if it moves, we have to cut all our short positions and move for longer positions, because Sensex might swiftly move higher towards 82,000 odd levels once we see good buying that emerges at the higher levels. Now from the perspective of open interest, so 29th April Tuesday is going to be the expiry for Sensex. So here if you could see on the put writers, they have taken down their positions, and we could see a lot of selling pressure that got added. So on the call side there have been good open interest positions that were built at 80,000 levels, because from this level itself we started seeing that downfall coming in. So that is when we have good open interest positions that were built here, and at every 500 odd levels at 80,500, 81,000 and 81,500 we see significant call writers who had emerged in anticipation that because there is a negative news that is flowing in, so markets are not expected to cross 80,000 odd levels. That is when we saw huge selling pressure or the open interest positions that had been built at the higher levels on the call side. So this very clearly tells us that Sensex is not going to move beyond 80,000 levels at least until 29th April expiry. So this 79,000 levels is going to remain crucial, and below that level we have support at 78,500. I think on Friday we touched these levels, and from here we immediately bounced back and closed until 79,200 odd levels. So the last support again is going to emerge at 78,000 odd levels. So if market trades in range bound, we might close on the 29th April expiry in between of 78,000 odd levels until 79,600 odd levels. So this is the range we might close for the 29th April weekly expiry for Sensex. So on the long side, because the kind of news that is getting circulated, it is difficult for Sensex to move upwards, provided if the issues and tensions subside, and then there is a strong buying that comes in from the institutions. So until then we have to trade cautiously. On PCR front, overall it is zero point 0.6, and at the money it is 0.64. So this says that we are in the bearish zone and might expect Sensex to trade either range bound or close somewhere towards or inch or move towards 78,000 odd levels on the downside. Nifty Bank, in fact, was quite negative on last Friday. So that is when we had seen a good selling pressure that had come up. So uh, Bank Nifty now is in a weaker zone. So the previous resistance is what it touched on Friday, and then there was some recovery that was seen, roughly around 40% recovery that was seen, and it closed at 54,660 odd levels. So now, as long as 54,000 odd levels is sustained, then we might trade in a range bound kind of scenario. If Bank Nifty drifts below 54,000 odd levels, then we might soon see good selling pressure that is expected to come in, and we might start trading in this range around 52,500 odd levels. So this entire rise would be easily sold off in just 2 to 3 trading sessions if there is more escalations between India and Pakistan, and that ultimately can turn out in a war kind of scenario. So as long as Bank Nifty sustains 54,000 odd levels, there is nothing much to worry. But there is no point in taking any of the long positions. In fact, you can sell positions or um, sell call options for 56,000 odd levels. The moment 50% of the points are recovered in this range of 54,000 to 56,000 odd levels, then we might cut off the 56,000 call option positions. So overall, there is no point in taking long positions. Rather, we can take calls for the higher strikes, 56,000 and above strikes, so that whenever any positive news comes in, we can cut off the long positions and start trading in the range bound kind of scenario between 56,000 levels to 54,000 levels. So once 54,000 on the lower end is broken, then we might see a swift downfall coming in, which might take Bank Nifty towards 52,500 odd levels. So let's be cautious. Now, from the perspective of open interest, at every 500 points, we see both calls as well as puts. So on the higher side, we see more open interest positions are built up on the call side, suggesting that at every higher level there is a strong resistance that is expected to be seen. Similarly, at the lower levels, we see good open interest positions on all the put side. So that very evidently says that at all the lower levels there is going to be good support that is expected to come from the put writers. So at every 500 levels we see strong support that has emerged from the put writing, so which might be difficult for Bank Nifty to soon drift down in one single go. So overall, yes, we have to be cautious on the long side, but yes, there emerges a strong, support at the lower levels at 53,000 odd, suggesting that at least, in the initial stage of 1 to 2 weeks, we might not see a Bank Nifty falling below 53,000 odd levels. So let's see how maybe the market is expected to trade on Monday and the overall week. So on PCR front, it is quite positive overall at 1, and at the money again it is 1.03, which again remains quite positive. But yes, since it is just the start of the May month series, so we cannot decisively come to the conclusion that where the market is headed, but it is very evident that there is a restriction that is going to come in beyond 55,500 odd levels in the initial stage, and then later 56,000 odd levels. So markets will trade in this range in the initial stage until the news from India and Pakistan maybe subsides. Post that we might see Bank Nifty moving towards higher levels, but until then 53,000 remains the strong support for us. Lastly, on the FinNifty, on FinNifty as well, because of this strong rally, we saw a good selling pressure that had emerged. So on Friday as well, as you could see, there is a big candle which has been like a bearish engulfing kind of candle, which very evidently suggests that there is a negative news on the financial stocks that has come in already. And if FinNifty starts trading above 26,050 odd levels on Monday, then maybe we might see some upside coming in. If it trades in the same range of 25,500 to 26,000 odd levels, then it is very evident that there is no point in taking the long positions. Rather, it might start trading below these levels to 25,500 odd levels to shortly, and then we might see the market taking support somewhere at 25,000 to 25,200 odd levels. So this would be the immediate support for FinNifty, and below that support maybe we will have support coming in at 23,500 odd levels, because this is the zone where from we started seeing FinNifty moving towards the higher levels and making the 52-week high or the all-time highs. So the immediate support for FinNifty is 25,200 to 25,000 odd levels, which will act as a support, because this is the zone or the previous resistance from where we had inched higher. So this would act as the immediate support for FinNifty. And on Monday we have to be careful. If Nifty is not crossing above 25,050 odd levels, then there is no point in taking the long positions. Long positions should only be taken when we close above 26,500 odd levels. So once we start moving above 26,500, then we can again turn towards the longs and then start trading for the higher levels. Talking from the perspective of open interest, so 26,000 levels is where we have been seeing strong support that had emerged. On one single day, just one single day, we saw roughly around 70% of open interest positions that were built up towards at the money strike of 26,000. And this overall open interest position was seen alone on put side. So that very evidently says that put writers have written down a lot of positions at 26,000 levels, stating that they are going to hold or maybe buy more as the FinNifty falls below 26,000 odd levels. So the immediate support that we have is 25,500, which is the round figure, and then later 25,000, which emerges as the strong support for FinNifty at the lower levels. On the higher side, we see at 26,500 odd levels, there have been call writing that was there previously, and it continued. But at the same time, there have been open interest positions even on the put side that were already held. So there is some expectations that FinNifty might trade range bound if there is no bad news that comes in, and slightly may start moving towards higher levels. So the immediate resistance on the higher side that is expected to be there on FinNifty is at 27,000 odd levels, which is towards the all-time highs. So as long as the bad news that is surfacing us, so till then the markets are expected to trade at the lower levels, or maybe might at worst kind of scenarios consolidate. But uh, on the long side, it is very difficult for the markets to move up. So as long as FinNifty is trading about 26,000 odd levels, it is okay. But the day it starts drifting below, it's good to taking the call sell call options, which will help you to make good profits. Overall, PCR it stands at 0.03, and at the money it is 1.27%. So as you could see, at any other strikes there are no positions that have been built up at all, at least on the put side. But on the call side, at higher levels we have some positions that have been built. So it's very evident that majority of the put call ratio is coming from uh, the one single strike, that is 26,000 odd levels. Talking from the perspective of FII and DII data. So on index futures, FIIs have been holding shorts with 35,226 contracts. On stock futures, they are long by 16.47 lakh contracts. On call options, again they are long by 36,163 contracts. On put options, also they are long by 6,359 contracts. So net on index options, FIIs have turned positive toward or longs, and are carrying 30,000 contracts. On proprietary trader side, they are short by 11,800 odd contracts on index futures. On stock futures, they are mildly long with 3.24 lakh contracts, and on call options, they are positive with 66,000 contracts, and on put options, they are again longs with 21,500 odd contracts. So net even proprietary traders are long with 45,000 odd contracts on index options. Now, from the perspective of client or retailers, they are short on index futures. They are long, massively long, in fact, on stock futures with 16.59 lakh contracts. On call options, they are short with 1.03 lakh contracts, and on put options, also they are short with 79,000 odd contracts. So net DIIs or maybe the client or retail traders are short by 24,000 odd contracts. So FIIs are long, and DIIs, sorry, proprietary traders are also long, whereas the client or retailers are short. On the other hand, let's see from the perspective of cash market. So DIIs on the cash market have been long with 3,540 crore positions or money that they traded with in the cash market. On the FII front, they have also been long with 2,952 crores investment in the cash market. So both FIIs as well as DIIs went long. You know, DIIs have been shorting or maybe selling off and giving way for the FIIs for a very long time. And lastly, because of the sell-off that we had seen on Friday, could be DIIs would have immediately emerged as the buyers at the lower levels. So that is when we have been seeing this huge amount of investments that had happened in the cash markets. So net on the cash markets, both FIIs and DIIs are long. So we have to see how the market is expected to open. Though the Gift Nifty suggested positive opening for our markets on Monday. However, because of the weekend kind of news and escalations, which can turn out, to kind of war, so that had led some negativity, and which would also have some impact on the markets on Monday. So let's see where and how the market is expected to open. But yes, keep a note of the crucial levels. For Nifty, it is going to be 23,800 odd levels where we have to uh, go short below which below those levels. And for Sensex, as long as it trades above 78,500 odd levels, there is nothing much to worry. Below 78,500 odd levels, we will see selling pressure coming in again. That's it maybe for today's market update. So if you like our video and like our content and the overall analysis from our side, do like, share and subscribe to our channel. So if you have any questions or clarifications that are needed with regards to index or any stocks, you can comment below to this video so that we can answer to your queries. So thanks again. Until Monday.
Hello viewers, welcome back again to our channel Investing Advisors. We know it's been long time we have not met, but yes, since you all were missing us, we had to come back. There are two reasons to share this video. Number one, I already mentioned. Number two, since we had completed financial year 21-22, we thought to share the P&L and performance of our proprietary account. Yes, you read it correct on the thumbnail. We made 53% for the financial year 21-22. Let me not keep you wait further, so I would be directly jumping to our account. We are in portfolio. I have selected all trades. Then April 2021 until March 2022. Let me scroll to the end and you see we made close to 29 lakhs for the year, which comes to 53% on our opening capital. So if I take average for 12 months, it comes to 4.4%, which is absolutely fantastic. Because if I recall the words of Big Bull Mr. Rakesh Jhunjhunwala, he says if annually you are able to consistently make around 15 to 20%, then you are king. So I'm quite excited as we are much ahead of those numbers, and thanks to the market, it has been kind enough despite COVID worries, Ukraine-Russia war, oil price spike, which is bad for Indian economy, then US inflation, which is at all-time highs, then aftermath situation and sanctioning risk for importing, exporting from and to Russia, and lastly, the most talked and hot topic, continuous FII selling in Indian markets. So all these issues had created havoc. However, a real thanks to DIIs and HNIs who are super bullish on Indian growth story. And lastly, how can I miss retail traders? They had been constantly pumping money via mutual funds, which kept our markets recover fast on every day. So trading markets with all these news flows had not been easy for us, as it had caused tremendous volatility, which really needs both experience and expertise. Also, I would say our discipline and conviction helped us do much better each time when we performed badly. Let me take you through how the journey of these 12 months had been. On the entire year, we were profitable for 8 months. The rest 4 months, we had losses. And all this was due to news-based movements, which wasn't easy to manage positions and change the view instantaneously. If you look at the graph closely, the 4 months loss could have been compensated with just 2 months of profit. What do I mean? In other way, as a rule of thumb, you should avoid big losses because small losses can be taken care of by small profits. And if you don't let your losses grow, then you can actually enjoy building the account with big profits. If this rule is followed diligently, I bet you will always remain profitable in trading business. I hope, like us, you all would have achieved good profits this year. If not, I assure you will certainly one day, provided you always keep learning and upskill yourself in trading. At any moment in your trading journey, if you need assistance, we are just a ring away. And for all the newbies who are excited with the profits, don't jump and start trading from next day, as trading is an art which needs learning and practice. We have curated courses on our portal, as you can see. Kindly explore this. And for the traders who have gained little experience in trading and want to further excel, can explore variety of strategies on our platform, which is already subscribed by number of traders and 30 plus HNIs who put together trade with 16 plus crore of AUM. If you want to be in right trading community, this is the right place for you. So join us today. Until we meet again, thanks for watching the video. Do share and subscribe to this channel. Hello viewers, welcome back again to our channel Investing Advisors. Today is going to be an interesting day as we are going to review about the performance on the trades that we had taken in January 2021 monthly expiry series. So let's begin with the first stock, HDFC Standard Life Insurance. Based on the analysis, we had taken short straddle strategy just before the start of the series in expectation that the stock would not make decisive moves either side. We had taken one lot of short position in future instrument at 688 levels and sold two put options of 680 strike. Now let's see how the payoff chart looked. The maximum profit of 44k can be made if stock closes at 680 levels, giving returns of 14% with an investment of about 3 lakh rupees. If I take a look at the chart, the stock exactly closed at the same levels where we entered, giving us the maximum returns out of this strategy. We made profit of 52k on options and lost 11k on futures trades as part of the strategy, giving us the net profit of 40k, which is 14% return on investment. Whoa, that's wonderful. Now let's analyze the performance on second stock, Tata Consultancy Services, very well known as TCS. On this stock as well, we had taken short straddle strategy just before the start of the series, expecting the stock to consolidate. We took one lot of short position at 2900 levels in futures and sold two lots of put option of 2900 strike. Looking at the payoff chart, the maximum profit of 67k could be made if stock closed at 2900 levels. But the stock decisively moved up, so to hedge the movement, we had taken combination of positions of both calls at 3080, 3280 and 3400 levels and puts at 3100 to ensure we do not make loss. The total capital deployed was 7 lakh rupees. To explain this on chart, the movement from 2900 to 3400 was very swift. And then there was a downward movement. So we had taken positions both while rising, we sold the call options, and while falling, we sold the put options. We made profits of 136k on options and made a loss of 102k in futures, giving us the net profit of 35k, which is 5% return. The last stock that we're gonna analyze is Divis Labs. On this stock, we had taken elongated short triangle strategy, deploying only options instrument. Let's see how the chart for the entire month looked. We had taken combination of calls and puts of one lot each at different strikes. When the stock was trading higher, we had sold call option of 3850 and 3900 series. And when the stock had fallen to lower levels, we took 3600 put option, and in order to hedge that, we took 3650 call option. The positions were taken with the movements of the stock to gain profits. On the payoff chart, the maximum profit of 60k could be made if stock closed about 3600 to 3650 levels. Total capital deployed on this strategy was 3.7 lakhs. But the stock had fallen down from the expected levels. Hence, we booked the profits at 44K, giving us the returns of 12% on investment. That's about all the analysis for the month of January. Thanks for watching the monthly expiry analysis. If you liked the video, do share with friends and subscribe the channel.
Hey everyone, welcome back to our channel. So for today's video, I would be sharing some of my analysis for the stocks and the indexes and the trades which I have taken for the expiry. So this is the chart which I have for Nifty 50. So, and this is set at hourly, and the prices which you would be looking at is for the 14 September's closing price. So right now Nifty 50 is at 17,382, and this is the channel that we had drawn weeks before. So Nifty price is well moving in the range. So as you can see over here that the price had rejected the upper segment, and it came down from there. So this was also the point where I made, since my chart gave me a sell signal, the chart so the two averages which I use is the moving average 50-day close and the exponential moving average 50-day close. So the crossover basically gave me a sell signal, so I definitely wouldn't go and buy. But so I made a position of 17,300 call sell, and as hedging is also important, so I had bought 17,400 call. So over here, so for the September end, I'm expecting a down move. It wouldn't be very fast, but yeah, in probably the span of 1 to 2 months, we might just see a down move in the coming few weeks. So coming to Bank Nifty right now. So for Bank Nifty, same applies for Bank Nifty. Bank Nifty, even though it is moving at a pretty much range bound kind of a market, but as we all know that after Bank Nifty is done with the range bound, it gives a breakout either ways. So over here it gave a downward move, and which was pretty much very sharp. So over here that as you can see that this is a sell signal, the crossover which has been given over here on 7th of September. This does not allow me to go long on it. So I don't have any positions in Bank Nifty right now, but I soon would be creating once it is done with the breakout. So usually the kind of positions that I enter for Bank Nifty are triangles, but I would be doing that in the coming few weeks after it is done with a good breakout. So the street has been talking about this one stock today, which gave a very good move, which is so the stock is Z Entertainment, and it is based on news. The news came out today, which was that 3 of the directors are leaving the company. So the street is expecting that the company is going through a management shift, and this would give a better future for the company as well. So even though it does not reduce the amount of corporate governance issues that it had in the past, so this gave a 40% up move today, and this is the highest which has been recorded for a particular day on one particular stock, and highest for this stock as well. So overall the broader markets have been quite not so bullish. The Hang Seng, which is HSI, gave a down move of 1.21%, and same is with Dow Jones, which gave a down move of 0.91%. Asian markets haven't been performing quite well since the past 1 week, so Nifty has been following that. And this is the option chain. This is for Nifty that we have. So the OI, which is the open interest. Open interest basically signifies the open contracts that are in the market. As you can see over here that for the put side it is more as compared to the call side. This is for the monthly expiry that we are looking at. So overall we can put it as that for the monthly expiry the OI is not that bullish. It is on the bearish side. Now coming for this particular expiry. So for this particular expiry, there are more amount of contracts for the call side as compared to the put side. Basically, change in the OI signifies that the amount of changes that the OI has in one particular day. So if it is negative, then it means that the amount of contracts have reduced in one particular day. But if it is positive, then there has been an addition in the amount of contracts that have been created. The OI, this is the total amount of OI that the contracts have, and this is never going to be negative. This is always going to be positive on both the sides. So let's go to Bank Nifty right now. So for Bank Nifty, it is almost the same. 8 lakh contracts for the call side and 5,76,000 contracts for the put side. So coming to our charts, few of the charts which I can show you right now is the Reliance chart. So Reliance, these are the lines which we had drawn a few weeks back, but it gave an up move since then, and right now since like 4-5 days, it is giving, it has kind of like exhausted and also covered the gap that it had made. So Reliance right now is, in my opinion, it is forming a cup and a handle pattern. So this is a cup that is being formed. It might just consolidate and then give a up move, but that also depends on the broader market as well. This is the chart for HDFC Bank. So HDFC Bank is also respecting the trend lines that we had made, and it is moving somewhat in between it. Also, something to look at is that the mid cap stocks have been giving a quite good up move. It is very stock specific, not anything related to the industry that it belongs, but it is very stock specific. But overall, the large caps are not giving a great up move. That is why the Nifty is not too bullish. So this is the chart for ICICI Bank. It has given a rejection over here. It gave a good rejection over here because it made a bearish engulfing, and over here as well it has given a rejection. So something to look at. And this is the chart for Bajaj Finance. Bajaj Finance is the chart seems very smooth, and definitely you can probably take a trade over here if you want to. You can short 7,500 all, I would say, with a hedge along with it. And I talked about Tata Motors in my previous video as well, that this is a pretty important candle that it made on 24th of August. Since then it has given quite a sharp up move, and it has given almost like 30 points. So even the chart has turned almost bullish right now, since the crossover is indicating a bullish signal. So you can probably go long on Tata Motors. So that's it for this video. I hope you liked it. Do let me know in the comment section what would you like to see in the next few videos, and happy investing. Thank you. Hello everyone and welcome back. So for today's video, I would be discussing about the index that we usually discuss, and I also would be talking about the GST Council meeting update that was released on Thursday of last week. So this is the chart for Bank Nifty, and as you can see over here that today Bank Nifty had fell by 1.8% approximately, and it was a bearish day today. So these are the lines that we had made a few weeks ago, and I had a bearish position. So which this position I had taken on Friday of last week. So it went pretty well today. And in the previous week, I would have suggested for you to go long, but with CT, with like hedging your positions as well. But it did not work too well because Nifty and Bank Nifty had given straight away, a good rally over here. Of Bank Nifty had given 600-700 points. So over here, as you can see, that 38,000 is the mark that I had marked, for which this is a big resistance that Bank Nifty would be facing in the is right now facing and will be facing in the future as well. And this is the channel, this is the kind of channel that it is going into. So this was the number one resistance that I had marked, and this is, you know, the sort of second resistance that I would say, which is placed at 38,300. So right now, Bank Nifty hasn't, you know, given a sell signal as such. This over here, it has given a long signal, but over here it hasn't really given a sell signal in hourly chart. I'm sure that it would have given in minutely charts. But if you're seeing a swing trading, then I wouldn't, you know, straight away say ask you to go short on it. You can, but definitely you have to hedge it. This is the chart for Nifty 50, and as you can see over here, that this was the channel that we had drawn, and this is the part where Nifty has given a reversal. And this is majorly because the global cues have been very, very weak. Indian markets still have, you know, has still fallen by 1% or 2%, but global markets are falling since the past 1 week, like Hong Kong Shanghai Index, which is the HSI, like the Hang Seng Index, which is the HSI, has fallen 3.5% today, and it has been falling since the past 1 or 2 weeks by 1% each day. So overall, the indexes seem very weak. I would say that, you know, it can touch near around 16,700 or 800 approximately. It won't go at once, but it can definitely, you know, take a few breaks and then get to that point. Also, I had talked about that in my previous video, that Nifty and Bank Nifty for September end, it is usually a trend that the markets do fall at the end of September. So this might also, you know, be the case in this year as well. So Bank Nifty's target right now, I would say that it would be 36,000, around 36,000, which is 1,000 points away. So by the end of this month, like the expiry of this month, it might be able to touch that point. Now looking at the global cues. So as you can see over here, that Nasdaq has fallen by 3%, S&P by 2.7%. And other indexes like Hang Seng, it has fallen by 3.3%. Overall, the global cues are pretty weak. SBI today fell by 3.7%. And other stocks that I would be talking about. So about the GST Council, so the announcement was made last week on Thursday, and since then on Friday, banks had, you know, Bank Nifty had seen quite a good up move. That was because the government is now planning that it would be setting about 30,600 crore rupees for setting up a bad bank council. So that would be, you know, taking the bad loans that the banks have. This would be a major relief for the banks. So it was a good sign, and the market and the banking stocks were up on that day. And 2-3 more things which were stock specific. I would say that for Zomato, there would be no new tax for Zomato. So for Zomato, the Zomato and Swiggy would be bearing the GST cost. So that is why this would, you know, add up to the burden of the aggregators. Zomato also has been, you know, falling since the past 4-5 sessions. This was also because one of the founding members had left the company, and the company only got listed 2 months back. So it was a negative sign for sure. So the stock has been falling since the past 4-5 sessions. For ITC, so the GST Council had decided that there would be no increase in the tobacco GST. So it had increased by 6% on that day, which was a good sign. And the stock is now trading at 230. It had, you know, kind of just broken the consolidation that it was following, but still hovering around 200 levels. One stock that I found really very interesting was Tata Motors while scanning the stocks. So Tata Motors, in my opinion, is can be this can be considered as an inverse head and shoulder pattern. So this is quite bullish in my opinion. And in the daily as well, that it has given on 14th of September, it had given a buy signal over here. So I would consider as a buy. And this is a small consolidation that it is following. So if it breaks, then it can give a breakout over here, and then might just give 100 points odd. So 360 plus 100 would be 460. I would be expecting by the end of this year, or 2 3 a couple of months ahead of that. 2 3 more things that were announced by GST Council were that there would be a cut in the medicines, in the tax rate of medicines, uh, from 12% to 5%, and some of the life-saving medicines would see 0% tax. So overall, these were the regulations that were released, and even though on Friday the markets saw a bullish signal, but due to the global cues, it is falling now, falling. And even though I would say that the valuations are quite pretty high, but the overall market sense is not that negative. So it might just correct a little just to go up. So that's it for this video. I hope you liked it, and do let me know what would you like to see in the couple of next videos. Happy investing. Thank you.
Hello and welcome to another video of Market Vision from Investwink Advisors. Today we bring you a detailed analysis of the market movements covering Indian equities, sectoral performances and global trends. Let's dive in. Indian benchmark indices closed in green today, extending their gains as investor sentiment remained positive. Nifty 50 rose 41.7 points, around 0.17%, closing at a strong level. Sensex as well gained 187 points, around 0.24%, reflecting strong broad-based buying interest. The market breadth was positive, with mid-caps and small caps also participating in the rally. The consistent upward movement suggests that investors are positive and optimistic about domestic economic growth and corporate earnings. Sectoral indices saw strong buying interest. Realty stocks surged 2.42% and were among the top performers today. All this was driven by strong demand expected in the housing sector. FMCG stocks as well gained 1.89% as rural demand picks up and companies report stable earnings. Healthcare stocks were up 0.8% as we saw steady buying amid global stability in the sector. Banking stocks as well rose. Both PSU and private banks contributed to the rally and were up by around 0.75%. All this was because there was improving credit growth and stable asset quality supporting the sector. This broad-based sectoral performances indicates healthy market participation and a bullish undertone. Global markets as well witnessed a rebound after recent volatility. Asian markets were mixed but remained positive. Nikkei was down 0.17%, whereas Shanghai was up 0.25% and Hang Seng rose roughly around 0.78%. European markets were all in green. DAX and CAC were up 0.5% and FTSE was up 0.67%. US markets rallied strongly. Dow Jones, S&P 500 and Nasdaq all surged nearly 2%. This was driven by easing inflation concerns and strong corporate earnings. The global rebound in the positive is a positive signal for Indian markets, as foreign institutional investors may increase their exposure to emerging markets like India. Now let's analyze how the markets are expected to perform tomorrow based on the chart as well as open interest. So we are in the Nifty 50 chart. So as you could see, today we approached the previous resistance of 24,200 odd levels. We just crossed that, and then from there we started seeing selling pressure that had come at the higher levels. So that is when there is a doji kind of pattern that we had seen. Now whenever we see doji kind of pattern, it signals either the rebound as a continuation or as a reversal. But considering the fact that overall the global markets have been positive and there is a good strong investor sentiment in the Indian indices, so we might continue the rally from here on. So the immediate resistance for Nifty is going to be roughly around 24,800 odd levels. So since we had discussed yesterday as well as previously, from here on it is going to be little bit difficult for Nifty to approach and go beyond 24,800 odd levels. So till then we might see a consolidation kind of phase for at least 2 to 3 weeks on Nifty. So as long as Nifty sustains the previous support, that is 23,800 odd levels, which was all this while acting as a strong resistance. Once we swiftly moved above that, now this would act as the immediate support for us. As long as Nifty is trading in this range of 23,800 to 24,800 odd levels, we might consider Nifty in a safe zone. So the moment Nifty starts falling below 23,800 odd levels, then we have to be cautious and cut down all our long positions. So till the time it holds 23,800, we are in safe zone. And as long as it is trading below 24,800 odd levels, it will consolidate. The moment it starts trading above 24,800 odd levels, since there is no immediate resistance, because 25,200 odd levels is just 400 points away, the strong resistance of 24,800 from where we had seen the huge dip coming in, right? So we might maybe trade range bound for another like 1 or 2 odd weeks, at least by the end of this month, expiry. And then maybe in the May month we might trade or start trading above 24,800 odd levels. So for next 2 days, for the Nifty expiry, we might trade range bound somewhere within 24,000 levels to 24,500 odd levels, or if the positive sentiments continue to rise, we might approach towards 24,800 odd levels. But beyond that seems difficult, at least for this expiry, given the fact that there are only 2 trading sessions that are left. So overall there is a positive sentiment across all the major indices, and Nifty has been rallying quite good, and we might continue to see this upward movement rally to further be there at least until 24,800 odd levels. So as we discussed, we expect the range bound scenario to continue for another 2 weeks, as long as Nifty trades between 24,800 to 23,800 odd levels. There is a 1,000 point range in which we expect at least 2 weeks the market to sustain. Now let's see what the open interest says. So as we discussed, 24,000 is a strong support. So there have been good put writers who have been holding their positions here. But the good point here is at every 100 point level above 24,000, we have been seeing good increase in the put writing too. So this indicates that as the Nifty inches up beyond 24,200 odd levels, we will see a strong put open interest that is expected to emerge. So as long as this continues, then our falling down towards the lower levels on Nifty uh, is difficult. But on the other hand, if you look at the open interest on the call side, at immediately 24,200 levels, we see a strong open interest position additions. At every 100 points, again, we see open interest additions being built up. Now, this says that Nifty may not head above 24,500 levels, at least for this 24th April expiry, since there are only 2 days and we are at 24,167 odd levels. So going beyond 24,500 levels in just 2 days expiry seems difficult, provided if there is no swift movement on the monthly expiry, that is on 24th April. So if we see a sudden rally further, then it might smoothly cross 24,500 levels. And since we do not have any strong resistance until 25,000 levels, we might easily move above or towards 24,800 odd levels, provided such kind of strong momentum that comes in. But in 2 days expiry, it seems to be quite difficult. So 350 odd points is where we might expect the market to move up. So overall, we might trade in the range of 24,000 to 24,500 odd levels until the 24th weekly expiry. So now, if you look at the PCR, it is 1.1 overall, which is quite positive, and 0 0.9 at the money. So on both sides we see it is positive, so we might continue the uptrend at least until 24,500 odd levels. Now let's talk from the perspective of Sensex. So Sensex as well had rallied, and then we see a doji kind of pattern because there was immediate sell off that was seen at 79,800 odd levels. So previously we had discussed that 80,000 to 79,800 odd levels is what was the previous resistance. From there, where we had swiftly seen a downfall of roughly around 4,000 odd points, right? So this is going to remain crucial until we strongly close above 80,000 odd levels. So till then we might see some range bound kind of trades. And since we have concluded the weekly expiry today, and yesterday itself we had discussed that today being the Sensex expiry, we may not expect any strong volatility to be there. So we had clearly mentioned yesterday that it is going to be quite calm, and the same had been seen. So Sensex just traded in the range of 300 odd points today. However, our expectation was that the expiry could be below 79,400 to 500 odd levels. However, it was just tad above 79,500 to 600 odd levels. So, considering that there was a range bound kind of trade today because of expiry, we might again start to see from tomorrow itself good bounce back from here, and then Sensex might start moving on the upper side. So as long as 82,000 levels odd are maintained, or Sensex trades below these levels, then we might see a big range bound kind of scenarios uh, that are expected to be there for the next upcoming 2 weeks. So we might trade in the range of 78,800 odd levels to 82,000 levels. So this is the range where we expect the Sensex to trade for at least 2 weeks as part of consolidation, because we have already seen a big rally coming in last 8 or 9 odd trading sessions. So we expect that it might trade a range bound for another 2,000 points, and then from there, based on the overall world markets and the quarterly results sentiment, if that remains overall positive on the corporate earnings side, then we might further start moving upwards in the month of end of May or start of June month, and would inch towards moving to 50 2 week highs. So beyond 82,000 levels we do not have any strong resistance coming in, so we might immediately start moving up the same way how we rallied roughly around 7 odd thousand points from here. Same way we would rally once Sensex crosses beyond 82,000 odd levels, as there is no immediate resistance available. So now let's see from the perspective of open interest. So we see since there was a weekly expiry, so for 29th April expiry, we are yet to see the open interest built up positions. So here, if you see, there is already a, strong support that comes in because of the put writing at 79,500 odd levels, and similarly at 79,600 levels. So as long as Sensex sustains these levels, then it might easily be headed towards 80,000 odd levels. So it is just 400 points from here for it to approach 80,000. We see already the call open interest built up positions here, roughly around 40,000 to 45,000 odd levels. Or positions were built up in just a single day. So and at every 500 odd points we see a strong open interest additions that are being seen. So we are not sure about this big bar of the put writing positions, whether it is a glitch or these positions are real. So we have to wait for another day's time to see and understand if these are valid. So assuming that at all the higher levels we are going to see a good open interest positions that are expected to build up on the call writing side. So call writers surely are going to push hard and act as resistance. However, yes, until 80,000 it is easy to move forward. Beyond that it seems to be difficult. So we might see some consolidation happening at the higher levels in the range of 79,000 to 82,000 odd levels. So as long as 79,500 is sustained, we should remain positive and trade all the long positions in Sensex. So overall, if you see at PCR, it is zero point 0.6 because the positions are yet to be built, and at the money it is 0.98 because we see huge positions that are there in this zone of 300 to 400 odd points itself. So overall Sensex is strong, and then we might see a rally further up, and 80,000 is going to be the crucial mark. Beyond that we might see a swift movement towards 82,000, and then we can start seeing to consolidate from there. Now looking at the bank nifty. So bank nifty has already at each single day it is giving all-time high. So today as well it moved towards 56,000 odd levels, just 40%, 40 points down below the 56,000 odd levels. So there is no doubt a lot of positive sentiment in all the banking stocks, and no doubt that the banks have also been showing the good results and outperformance across their quarterly results. Now if you see, we have already crossed roughly around 1000 odd points about the previous 52-week high. So today at the higher levels we have already seen a selling pressure that has come in for roughly around 300 points. So this zone we have to wait and watch. Is there a selling pressure that would emerge, or we might further see stronger buying zones coming in above 56,000 levels. So as the global markets have been trading positive, and our major indices like Nifty and Sensex have also been trading positive, so there is higher expectation for Bank Nifty to move up towards 56,500 to 57,000 odd levels in just 2 weeks kind of time frame. So we have the monthly expiry for bank nifty. So owing to that monthly expiry, we might see some volatility coming in the range of 56,500 odd levels to 55,000 levels, or maybe the previous resistance of 54,500. So as long as we sustain 54,500 levels and trade in the range of 56,500 to these levels, then we might consider that the overall monthly expiry is going to be kind of in a range bound kind of scenario. So overall, bank nifty is the strongest and positive. So any short trades would be not good. We might see big losses provided there is a swift rebound from these levels. So as long as 54,500 sustains, we are good to carry the long positions. Now let's look from the open interest perspective. So as we had seen at 59,960 odd levels, from there 55,960 odd levels, we had started to see good sell off coming in, right? And today as well, if you see, roughly around 30% of open interest additions had happened at 56,000 odd levels. So this might signify that it might sustain and put a lot of pressure until the monthly expiry, or if this crosses, then we might swiftly move towards 56,500 and 57,000 odd levels. But given the fact that we have only 2 days to expire, so we might not see a huge volatility coming in. And still, if you see, day by day we have been seeing some unwinding in the call positions at all the lower levels. However, still we see good positions are being held, and there is immediate support at 55,000 odd levels, which is the round figure again. So 600 point is what is the range. So overall, we might trade in this 1,000 point range for the monthly expiry. At any point in time, if we cross below these two levels, then we might see a sudden breakdown or breakout at these levels. So since there is a positive momentum across the major indices and the broader indices, uh, we expect that bank nifty might sustain 55,000 levels until the 24th April expiry, which is just 2 days away. On the open interest, it is overall at 1.2, which is quite positive, and at the money is also 0.8, which is again positive. Lastly, on FINNIFTY has also been inching towards higher highs, and we have already crossed roughly around 1,600 to 1,700 odd points from its previous 52-week high. So as long as FINNIFTY trades above 26,400 odd levels, then that can be considered as a positive. The moment it starts dropping below 26,400 odd levels, we might see a sudden sharp downfall. Though the financial sector stocks have been performing well, and Bajaj Finance being the Bajaj Finance and Bajaj Finserv being the kings here, have been trading well. So as long as the major stocks in the FINNIFTY indice are strong, we might not see a sudden downfall coming in. So any result announcements that are impacting and negative for the strong stocks, then that might start leading to a downfall in the FINNIFTY. So as long as each day's high is sustained and it moves further, we might continue to see newer highs coming in the FINNIFTY too. Now let's see from the perspective of open interest. So open interest, as we discussed even yesterday, is skewed. So here there is a lot of put additions that we are seeing at all the higher levels, from 26,700 until 27,000 levels. So we might not see FINNIFTY crossing beyond 27,000 odd levels, which is just 350 points, 375 points away from the present levels. And on the lower side, we do not see any strong support. The big support is coming at 26,000 odd levels, and then there are small supports at every 100-point level. Um, so there is kind of tug of war. So there are equal open interest positions built on put side at the lower levels. Similarly, on the higher side until 27, we see strong open interest positions being built. And in fact, if you see just yesterday, there have been good open interest positions at every 100 points that have been built. So this shows that there is going to be a strong tug of war kind of scenario. And whenever such scenarios happen, then we might see a range bound kind of trades coming in, and FINNIFTY will expire in a consolidated manner without much volatility coming in. So crucial levels to follow is 26,500 as acting as immediate support, and then 26,800 or 26,600 as the immediate resistance. So overall PCR it is 1.5, and then at the money it is 0.5, which is not that bullish. Lastly, on the FII and DII transactions. So FIIs on index futures are holding shorts, so 78,000 short positions are being held. On stock futures, they are quite bullish, and 17.4 like 49 lakh contracts are being held, so which is positive. On call options, they are holding long, 1.58 lakh contracts, and on put options again they are holding long, which means they are expecting the markets to fall down. So it is 1.61 lakh contracts. So net if you see on index options, FIIs um, are not determining or are indecisive. On the proprietary traders side, they are mildly long on index futures. They are mildly long on stock futures with 1.23 lakh contracts. On call options, they are short by 45,000 odd positions. And on put options, they are long, meaning to say they are holding the short positions, which suggests that overall they are going long on the indices. So as you could see, net positions, it is positive 1.2 lakh contracts. So DIIs are FIIs are indecisive, and proprietary traders are long. Now let's see from the perspective of retail traders or clients. So retail traders are long on index futures mildly, which does not make much difference. On stock futures, they are quite bullish and holding 17.41 lakh contracts. On call options, they are short 1.13 lakh contracts, and on put options they are again short 58,150 to 1000 contracts. So net if retail traders are holding shorts in the index options. So whenever the retail traders are against the overall trend, that would have a significant impact on them, and we would see a swift rally which might lead to a lot of losses to the retail traders. So today as well, we see all the global markets being positive. So it is expected that the gift nifty being already positive, we might also open positive tomorrow. So on the cash market, DIIs have been sellers to the tune of 8,886 crores, and this is clearly been absorbed by FIIs. So they are holding positive and have absorbed the overall selling pressure from the DIIs. And today in the cash markets, they have taken positions to the extent of 1,290 crores. So as long as FIIs remain positive, because they have been net sellers for a very long time, and huge positions have been sold off. So now seems to be like they are accumulating the positions here. So we might see upward rally to continue in the major indices and in Indian markets overall. So the key takeaways for tomorrow and for the subsequent weeks is Indian markets remain resilient with sustained buying across the sectors. Global recovery support might come in, which may lead to further inflows into the Indian equities. Now, considering that US Fed policy meeting and quarterly earnings season around the corner, markets may see some volatility. However, the overall trend is expected to remain positive. So that's it for today. So stay tuned to the Investment Advisors for more updates and for each day's expert analysis. Please, if you like this video, do like, share, and subscribe to our channel for our daily market analysis and investment strategies. Till then, thank you and happy. Hello viewers, welcome back again to our channel Investment Advisors. With the start of new year 2021, we started series of videos that gives a glimpse of the trading strategies we deploy and outcome of the same is reviewed each month as performance check. Today we are going to review the April month performance. In the thumbnail you would have read 50k profit for the month. Yes, the profit was only 50k but a lot of lessons to learn why it was only 50k. So watch this video till the end so that as beginners you can avoid the mistakes that we did and learn out of it. In the April month, we traded only in Bank Nifty options. And let me tell you, this was again a tough month for option sellers as Bank Nifty was very volatile in each weekly expiry and throughout the month. No wonder Bank Nifty closed the month at same levels where it opened. But it gave a roller coaster ride for the traders and understanding the trend was challenging due to lot of eventful news. Now, speaking on the strategy, we deployed strangles and straddles in each weekly expiry. But you might be aware these strategies are not efficient when the range within which you hedge your positions is broken. And that was the reason why we had to run for cover, adjust our positions, and put a strict stop loss to limit our losses. The another very important aspect which we would like to bring to the table is when the trades are against you, not manageable, and your inner feeling do not allow to further carry trades, then just exit. The reason being, stock market is full of opportunities. If you do not make profit in one trade, in a week, or in a month, it's okay. But do not stick only to that particular one trade to turn profitable. For better clarity, let's quickly go through the chart. The green line that you see is marked as resistance and red line being support for the month. The dashed lines are weekly expiry series days for the month of April. As I mentioned earlier, Bank Nifty opened and closed the month at same levels, but it swinged in the 4000 points range, which is around 10 to 12% move, forming a V-shape kind of fall and recovery. I have split the entire month in each weekly expiry. Let's discuss one by one. We are in portfolio. Let me change the month to April. We do not have any positions in futures. We traded only options. Let me click all. Here we go. The profit you see 4.43 lakhs is inclusive of April first week expiry, which we had already taken into account in the March month performance review. You can watch the video for reference in the link above. Now, if we exclude 3.91 lakhs of the first week from 4.43 lakhs total profit, then we remain with net profit of only 52k for the April month. Let's start our analysis for 8th April weekly expiry. It was a short week because of holiday, so the premiums decayed rapidly. Bank Nifty was in consolidation phase in the range of 32,150 to 33,600 levels. So we applied only strangle strategy. And you see, all the strikes that we took, both at the money and out of the money, call and put options, had profits. And the total profit for the week was 3.48 lakhs. Everything seemed to be like hunky dory till the first week. Now, in second week, that is 15th April weekly expiry. Again, it was a short week due to holiday. There was sudden spike and dip in the volatility index owing to fall of 2400 points in Bank Nifty in just 2 days and a sharp rise of 1600 points in next 2 days. It was a perfect V pattern. We had applied both straddles and strangle strategy here. Hence, all in the money strikes on call options had huge loss, whereas out of the money strikes had marginal profits, but when you hedge positions, the other leg, that is, put options, had profit in all the strikes. This way, overall, we closed the weekly expiry with net profit of 2k. We had to go through a lot of hustle and bustle only to ensure we remain in profits. Then, third week again was a short expiry due to holiday. So the premiums had to decay fast. Unlike second week, here the market seemed bearish. A slight fall on day 1, then a big gap down on day 2 with a small rebound, then a consolidation on day 3, and on expiry day a strong positive close, though there was a gap down open. These kind of undecisive moves deter the positions of the option writers. Though the week was volatile, we were able to adjust all our positions. On in the money calls, we lost heavily, but it was covered with out of the money calls and put options. Hence, we ended with negligible loss with 430 rupees. Coming to the last week, April 29th weekly expiry. On day 1, Bank Nifty traded with positive sentiments. And something very important to notice was Bank Nifty had tested the support zones 3 times in a month, and every time it came down to those levels, there was strong buying on the dips. That indicated Bank Nifty was poised to trade higher and was confirmed on the third day when it closed positive. Until this day, we were on the losing side and were prepared to exit if it goes against us. On the fourth day, Bank Nifty opened high and closed almost 1100 points up. Our losses too mounted with this big up move. And since we were closer to expiry, the premiums on the out of the money options were trading at low prices. So there was no point in hedging. It was a right decision to exit all the positions and sit quiet. We could have avoided a big dent by exiting the losing positions on the call options a day before. But we stick with it because we were diligently following our rules. We knew our limits, so had put strict stop loss. Once it crossed those levels, we exited the trades and booked the loss of 2.98 lakhs in the last week. Next day, so total profit for April month remained only 52k, though till third week it was reflecting 3.5 lakhs. The lessons to learn for beginners is cut down your positions when you are not confident. Take risk for the amount which you could afford to lose. Markets will give early signals You just have to follow it. The only tool that traders have control on in this market is stop loss. If you limit your losses, by default, you turn profitable. With this, we come to an end with the performance review for April month. To get regular market updates, kindly follow Investment Advisors on Twitter, Q, LinkedIn, Facebook, Instagram and Telegram channel. Thanks for watching the video. We hope the learnings we shared will make you better trader. If you liked it, do share and subscribe to this channel. Thank you.
Hello viewers, we welcome you again to our channel Investing Advisors. As you know, we have launched a video series where we will share the monthly performance on the trading account from 2021. For the ones who missed to check January performance can check in the link. Let's now begin with the performance for the February month. The entire month was highly volatile owing to many major events like budget. Later, Finance Minister Nirmala Sitharaman lifted restrictions on private banks to participate in government projects. Further, Prime Minister Narendra Modi announced privatization of majority government institutions, stating government has no business to be in business. And then finally, rise in US bond yields had led to the roller coaster ride in the markets. Let's now look how the indices have performed. Nifty started the month at 13,700 levels, jumped all the way 15%, marking lifetime high levels of 15,400 in mere 5 to 8 trading sessions, and then finally reversed back 50% of move, closing the month with 14,500 odd levels. Bank Nifty, however, performed fantastic move. Started with tepid 30,500 levels, jumped to the high of 37,700 levels, a move roughly of 25% in just few trading sessions, and then closed at 35,000 levels with the gains of 15%. Since Bank Nifty was in the limelight, we traded entire month only in Bank Nifty. Looking at the index movement, we had taken synthetic futures, which is combination of futures and options instruments. The payoff chart looked like this, where we had taken positions in weekly, both calls and puts, along with futures based on market movement to maximize the profit. Now let's look at all the positions giving P&L details. On the futures, we lost 1.7 lakhs. However, on the other hand, on options, 4.3 lakhs was the gain, giving net profit of 2.63 lakhs for the month, which is roughly 7% returns on the capital. With this, we come to an end with the performance review for the February month. To get regular updates, kindly follow Investing Advisors on Twitter, Q, LinkedIn, Facebook and Telegram channel. Thanks for watching the video. If you liked, do share and subscribe to this channel. Thank you.
Hello everyone, I'm Stuti Agrawal and welcome to our channel. So for today's video, we would be talking about the trades that you can take for the weekly expiry, which is on Thursday. So I'm analyzing this on 5th of September, and the last closing day was, the last candle that was made was on 3rd of September. So this is the Nifty chart that I have in front of me. And as you can see that I've taken the hourly chart right now, and I would also come to the daily chart as well. So for the hourly chart, I'm right now using the moving average 50-day close and the exponential moving average 50-day close. So over here, as you can see that on 27th of August, our indicators had given a buying signal since the red line had crossed the blue line So the EMA had crossed the MA, which depicts that the recent candles have been quite bullish and it can give a good up move. So the melt up since then the melt up has been quite very quick, and since on 30th of August it opened at a gap up, and since then it has given 7 to 800 points support, and right now Nifty is at 17,320. So even though I have shifted the shifted the channels a little, but I'm expecting a little bit of a correction right now since the volumes are not supporting the Nifty chart right now. Now onto the daily chart. So for the daily chart as well, if you're like taking monthly trades or trades for the next month and so forth, then it is definitely very bullish right now. And if you don't see a reversal indicator or reversal, trend reversal in the hourly chart, then I don't think so that you should be shorting the markets right now. Since also I would be coming to Reliance. Reliance has given quite a good up move of 4%, which was on 3rd of September, and it was actively traded as well. So the volumes have also supported the price movement of Reliance. So coming to Reliance over here. So as you can see that Reliance has given an up move of after quite a big while. So this is the daily chart over here, and after like around 1 year, like exactly around 1 year, it has given a sharp up move, and this was a breakout. So this is a breakout that it has been with a good volume support. So the volumes have supported the price as well, and it gave a 4% up move on Friday. The EMA and MA are also supporting the chart right now. And coming to Bollinger Band, according to the Bollinger Band, the chart has has reached its peak, but I can expect that since this is quite a good pattern, since the chart was moving upwards and then it has kind of like formed a rounding bottom pattern. So or you can say a cup and handle as well. So this can give I would expect that it can go up by 400 points, which is the lower segment of the consolidation, and the upper segment of the consolidation, that is 400 points support. So I would expect it to go 400 points above that. So my expectations by probably the end of this year, of this calendar year, would be 27 to 2800, or it can be achieved earlier as well, but I'm expecting a short amount of corrections in between that. So this is the Nifty chart, that Bank Nifty chart that we have in front of us. Bank Nifty chart is also like moving in between the channel, which I have drawn through the trend lines. And for the simplicity, we can not use like Bollinger Band, but if we also use moving average 50-day and EMA 50-day, then over here it has given a buy signal. It gave it on 1st of September. So over here, this candle. So for the traders that would be taking the monthly trades and all, then they can definitely go long on Bank Nifty right now. For the hourly charts, for the traders who are doing swing trades, then also it is bullish. If you don't see a reversal, then don't go short at all. Over here, as we do have like a gap as well, so I am expecting it to cover it by the end of September. Even Bank Nifty as well as Nifty chart has got a gap up on 30th of August. It had got it, so I'm expecting it to get it covered very soon. So apart from Reliance, there Zomato had also given quite a good up move, and 2-3 more stocks which have given a kind of a dead cat bounce. IT stocks have been in quite very active this week, and banks were in focus as well. So that's it for this video. If you like it, do let me know about what else would you like to know about the charts, and also like it and share it with your friends. Thank you and happy investing. Hello everyone, I'm Stuti Agarwal and welcome back to Investing Advisors channel. So for today's video, we would be discussing about the different types of chart patterns that exist for technical analysis. So technical analysis is basically based on the price movement of a stock. As we know that there are two types of analysis that we can do. One is the technical analysis, and then we have a fundamental analysis. So let's begin. We have two types of candlestick. One is a bullish candlestick, and then we have a bearish candlestick. A bullish candlestick is basically signified by the green color, and then the bearish candlestick is signified by the red color. A bullish candlestick is when the price of the stock rose on a particular day. So when the opening is lesser than the closing price of the stock. So let's suppose that the stock is ticking from 600 to 650 in one day, then a bullish candlestick would be formed. Exactly opposite is with the bearish candle. The opening price is more than the closing price in this case, and it is signified by red color. This basically signifies that the price of the stock fell on that particular day. A high and a low is signified by a small kind of wick on the candlestick. So this is a small snapshot that I took from ICICI Bank's chart. Basically, a accumulation of different candlesticks forms a chart pattern. So over here, I've used tradingview.com. You can also use investing.com for the technical analysis. So there are two types of chart patterns that exist. One is the continuation pattern, and then we have the reversal pattern. For both of them, we have bullish pattern and a bearish pattern. A bullish pattern basically means that when the stock is expected to go up, then it is called a bullish pattern. And when the stock is expected to go down, then it is called a bearish pattern. So a continuation pattern is basically when the price will continue to move in the same direction after the continuation pattern has been formed. So over here, as you can see that the direction of the chart is intact. As the stock is rising, a small falling wedge has been formed over here, and the stock would be rising back again. So these are the three examples that I've taken for the bullish pattern, and these are the three examples that I've taken for the bearish pattern. So for the bullish rectangle, as you can see that the stock is currently rising over here, and then it has entered into an accumulation phase. So lower part of the consolidation phase is the stop loss. Below it, the pattern won't be valid, and you are supposed to take an entry over here so that the stock can give you an up move to the target over here. So target is basically determined by the amount of points that the range has been made of. So let's suppose that there is a 100 points range. Let's suppose that this point over here is at 600. The price is at 600, and over here the price is at 50. So 650. So there is a difference of 50 points. Basically, your target is then 700. That would be 650 plus 50. Then we have the reversal pattern. So reversal pattern is when the price pattern signals a change in the trend direction. So over here as well, we have the bullish pattern and the bearish pattern. So for the bearish pattern, this means that when the stock is rising, it has formed a double top over here, and it would be changing its direction to falling. And so it would be falling ahead. So basically the rationale behind this is that, so this is a mental resistance we can say over here. This means that the stock could not sustain above resistance that it has, then it has started to fall there. So over here, this is the neckline. This means that the amount of points that have covered from the top to the neckline would be the points that is your target, which it would be falling at. So let's suppose that the top is made at 600 and neckline is at 550. So there is a gap of 50 points. So your target would be of 600, which is 650 minus 50. Exactly opposite is with the bullish pattern. So this is the double bottom that has been formed over here. Then we have inverse head and shoulder, and this is the head and shoulder. And then we have the rising wedge and the falling wedge. Over here, I've taken the frequently occurring patterns. First, we have the cup and handle pattern. So the cup and handle also has an inverse cup and handle, which is a bearish pattern. So cup and handle is basic continuation pattern. Here, as you can see that the stock was rising initially, then it made a cup and then a handle, and then it would be rising again. The amount of target that we would be expecting out of it would be the base of the cup and then the starting of the handle. That would be the amount of target that we would be expecting over and above when the stock is at this price. Usually you would get to know about when the stock is going to rise. The stock would give you a breakout over here when the handle has been made over here, since you can see over here as well that the stock has risen quite significantly over here to give you a breakout. Then the second pattern which I would like to stress upon is the head and shoulder pattern. So head and shoulder is basically made by one head and two shoulders which are of the same length. So head and shoulder is a reversal pattern, which means that if this is formed, then the stock would be falling. By what amount it would be falling would be determined by the base of the head and then the top of the head. So let's suppose that the top of the head and the neckline has a 50 point of difference. Then from the neckline, the stock would be falling 50 points downward as well. Over here, there is a inverse head and shoulder pattern, which is a bullish pattern. This is also a reversal pattern as well, since the stock would be rising after the pattern has been made. This is the third pattern that I would like to stress upon, which is double bottom and double top. It is also quite frequently found on a lot of charts. So double bottom is basically made when the first bottom and the second bottom are identical and at the same price. It basically means that there is, a sort of a mental support that the stock is having over here, and the stock would like to, bounce back again. So this is a bullish pattern, and it is also a reversal pattern that I've taken. This is double top formation, which is again a reversal pattern, but this is found at the top when the stock has been rising and has made two of the similar tops over here. As you can see that there is a first top and then we have the second top, and then the stock is expected to go down. So this becomes a bearish pattern. This is the last pattern that I would like to stress upon, which is a triangle pattern. Basically, there are three types. One is the ascending triangle, then we have a descending triangle, and then we have a symmetric triangle. Ascending triangle is basically a continuation pattern. So when a stock has been rising, it would rise back again. A descending triangle is also a continuation pattern. It is found basically when the stock is falling, then it would be making a descending triangle and then fall back again. A symmetric triangle can be bullish as well as it could be bearish. So over here, I've taken a snapshot of Axis Bank chart. So as you can see that the stock was initially falling, then a triangle pattern was formed, and then there was a breakdown again. So for breakdown, as you can see that the stock had fallen quite significantly to break down the pattern and then fall back again. So that's it for this video. I hope you really liked it. Also, do let me know that what kind of videos you are expecting next, and do share it with your friends and give it a thumbs up if you really liked it. Thank you so much. Happy investing.
नमस्कार दर्शकों, हमारे चैनल इन्वेस्टिंग एडवाइजर्स में आपका फिर से स्वागत है। आप सभी दर्शक जो हमारे वीडियोस को फॉलो कर रहे हैं वे जानते हैं हमने नए साल 2021 की शुरुआत के साथ मंथली परफॉर्मेंस रिव्यू वीडियोस की श्रृंखला शुरू की थी, जो कि एक झलक देती है हमारे ट्रेडिंग रणनीतियों की। आज फिर से हमने एक गजब का वीडियो लाया है आपके लिए, और इस वीडियो में हम मई महीने की ट्रेडिंग परफॉर्मेंस की समीक्षा करेंगे। मैं आशा करता हूं कि अभी तक आप सभी ने हमारे मई महीने का 12 लाख प्रॉफिट टीजर वीडियो से रूबरू हो चुके होंगे, क्योंकि आज के इस वीडियो में हम कैसे यह 12 लाख प्रॉफिट किया गया है उसका विवरण करेंगे। तो चलिए झटपट वीडियो की शुरुआत करते हैं। मई महीने में हमने केवल बैंक निफ्टी ऑप्शंस में ट्रेड लिया था, और मैं आपको बता दूं मार्केट पहले के 2 सप्ताह काफी स्थिर था और आखिरी के 2 सप्ताह ट्रेंडिंग था। इसके चलते हमने बड़ी आसानी से तगड़ा प्रॉफिट बनाया, और मैं यह भी बता दूं कि यह हमारा अभी तक का हाईएस्ट प्रॉफिटेबल मंथ रह चुका है। अगर स्ट्रैटेजी की बात करें, चारों सप्ताह हमने ऑप्शंस, शॉर्ट स्ट्रैडल और स्ट्रैंगल इंप्लीमेंट किया। अभी यह स्ट्रैडल और स्ट्रैंगल ऑप्शंस होते क्या है? अगर मैं आसान शब्दों में बताऊं, स्ट्रैडल ऑप्शन स्ट्रैटेजी में एक ही स्ट्राइक के कॉल और पुट में ट्रेड किया जाता है, जहां की स्ट्रैंगल ऑप्शन स्ट्रैटेजी में अलग अलग स्ट्राइक के कॉल और पुट में ट्रेड किया जाता है। तो आप सोच रहे होंगे कि ये ऑप्शन स्ट्रैटेजी से बैंक निफ्टी में ट्रेड करके केवल 1 महीने में इतना प्रॉफिट बन सकता है? तो आज जवाब आपको इस वीडियो में मिल ही जाएगा, तो अंत तक इस वीडियो को देखते रहिए। आपको समझने के लिए आसान रहे इसलिए हम सीधे चार्ट पे चलते हैं। लाल रेखा निचला सपोर्ट दर्शाता है और हरी रेखा ऊपरी रेजिस्टेंस है। यह हमने बैंक निफ्टी वोलेटिलिटी और ट्रेंड मूवमेंट को देखते हुए बनाया है। फिर बीच में डैश्ड रेखा हर सप्ताह का एक्सपायरी डे दर्शाता है और जो नीली रेखाएं हैं वो हमने ट्रेंड एनालिसिस के लिए खींच रखी है। तो चलिए डायरेक्टली हम मई महीने के पोर्टफोलियो को देखते हैं और सप्ताह दर सप्ताह की बात करेंगे। यहां आप देख सकते हैं पूरे महीने का प्रॉफिट 11,86,000 है। पहले सप्ते की बात करेंगे। 6 मई एक्सपायरी के लिए हमने 30 अप्रैल से ट्रेड्स लेना शुरू कर दिया। यह एक्सपायरी में वोलेटिलिटी ज्यादा नहीं थी। आप चार्ट में देख सकते हैं बैंक निफ्टी केवल 1500 अंकों के दायरे में रहा। हमने इस सप्ताह में स्ट्रैडल्स और स्ट्रैंगल्स दोनों स्ट्रैटेजी का इस्तेमाल किया। चूंकि वोलेटिलिटी बहुत कम था, इस पूरे सप्ताह में हमने थीटा डी के यानी कि टाइम वैल्यू का फायदा उठाया। इस तरह पहला सप्ताह का प्रॉफिट 3,90,000 हो चुका था। अभी चलते हैं दूसरे सप्ताह में। छुट्टी के कारण यह सप्ताह केवल 4 दिन का था। इस सप्ताह में भी वोलेटिलिटी काफी कम दिखाई दी। बैंक निफ्टी केवल 800 अंकों के दायरे में ट्रेड करता रहा। चूंकि यह छोटा सप्ताह था तो ऑप्शन प्रीमियम्स काफी तेजी से गिरते हैं। इस सप्ताह भी हमने स्ट्रैडल्स और स्ट्रैंगल्स का प्रयोग किया और हम काफी अच्छे स्थिति में थे, लेकिन मुनाफा ज्यादा नहीं हो पाया। हमने 1,21,000 प्रॉफिट लेकर सप्ताह एक्सपायरी की समाप्ति की। तीसरा सप्ताह। यह सप्ताह बैंक निफ्टी के लिए पॉजिटिव रहा। हम देख सकते हैं चार्ट में लगभग 2000 अंकों की ऊपर की चाल दिखाई पड़ती है। हम यह चाल की अनुमान लगा चुके थे। उसके अनुसार हमने हमारे ट्रेड्स लिए। पहले हमने आउट ऑफ द मनी ऑप्शंस दोनों पुट और कॉल के शॉर्ट करते रहे। फिर तीसरे दिन जब तेजी कमजोर पड़ी तो हमने स्ट्रैडल का प्रयोग किया और एट द मनी ऑप्शंस को शॉर्ट करते रहे। इस सप्ताह में हमने 3,58,000 का मुनाफा किया। चौथे और आखिरी सप्ताह की बात करते हैं। यह सप्ताह भी काफी ट्रेंडिंग रहा। तीसरे सप्ताह की तरह यह सप्ताह में भी ऊपर की बड़ी चाल दिखाई पड़ी। बैंक निफ्टी लगभग 1800 अंकों की तेजी में चल रहा था। इस सप्ताह में शॉर्ट स्ट्रैंगल का प्रयोग ज्यादा था, पर जब आखिरी के 3 दिनों में ज्यादा मूवमेंट नहीं दिख रहा था तब हमने 35,000 स्ट्राइक का एक स्ट्रैडल भी ट्रेड किया। यह सप्ताह ने भी हमें 3,14,000 का मुनाफा कमा कर दिया। इस तरह मई महीने का कुल लाभ 11,86,000 रहा। अभी के लिए बस इतना ही। हम फिर मिलेंगे जून महीने के परफॉर्मेंस समीक्षा करने। नियमित बाजार अपडेट प्राप्त करने के लिए कृपया इन्वेस्टमेंट एडवाइजर्स के ट्विटर, कू, लिंक्डइन, फेसबुक, इंस्टाग्राम और टेलीग्राम चैनल को फॉलो करें। वीडियो को अंत तक देखने के लिए धन्यवाद। हमें उम्मीद है कि हमारे द्वारा साझा की गई ट्रेडिंग ज्ञान आपको बेहतर ट्रेडर बनाएगी। अगर आपको यह वीडियो पसंद आया तो इस चैनल को शेयर और सब्सक्राइब जरूर करें।
Hello viewers, welcome to our channel Investing Advisors. Today, yet again, we are going to discuss on very interesting topic and the most talked stock, GameStop Corporation. I know by now you all would have heard or read the news that is going around on this stock. Well, it's a gaming company which has its retail stores or gaming parlors across United States and is listed on the US Bourse New York Stock Exchange. So, what is peculiar about this stock? The hedge funds believed the stores of the organization were struggling to generate revenue. As a range of fund houses bet that it would slump during the pandemic, and for this reason, it was one of the most shorted shares on the US market. It all started when well known hedge funds like Melvin Capital and Citron Research got interested in GameStop shares. These funds are known to target stocks that they feel are overvalued by going short on the shares. Now you would be wondering, how is this possible? What is short selling all about? Okay, short selling or short sellers are those who borrow shares and sell at high while hoping the price would fall further. So they will be able to buy the shares at lower price and return the shares to the lender for minuscule fee called securities lending fee. Short selling is widely accepted practice not just in United States but across the markets and different geographies. Fine, so let's come back to our topic. Now, the hedge funds believed the GameStop shares would underperform and they had already played their cards. Now they were patiently waiting for the shares to fall and make a killing by huge profits. But they had no idea that an online group on Reddit where members exchange stock ideas, views, and opinions will turn it to nightmare. A series of users on the Reddit forum called Wall Street Bets noticed that GameStop shares were undervalued by the market and it could give a huge opportunity with better risk to reward ratio because GameStop's low share price made it relatively easy for a large number of retail people to buy in with just little money. And as the share price kept rising, many users flocked to the forum and invested their amounts. Since more people bought in, it triggered the short squeeze, and the big hedge funds had to cover the short positions in losses, making a way for stock prices to rise further. And the stock just kept moving high. To understand this better, let me take you through the chart quickly. Before the pandemic, the stock had been falling, and during the pandemic, it was trading at just $2.50. Post the pandemic, it just started trending up. There were millions of shares that were traded, and just 3 weeks before, in the month of January, billions of shares were traded, taking the stock price from just $18 to the highs of $483, giving a return of 700% to these retail traders. Isn't that amazing? So, the stock markets across the world were surprised at how amateur traders created history. There is also news by few business channels that the hedge funds had lost in the range of 10 to 12 billion dollars in this stock. Few of the fund houses also stare at bankruptcy and looking at to bail them out. This kind of unexpected move could not be expected by the hedge fund houses. So what could we learn from this scenario? Let me tell you or talk about 4 important points here. 1. Knowing fundamentals always do not work in markets. 2. Do not trade against the trend. Make trend as your friend. 3. Markets work on sentiments and liquidity. 4. We used to say, follow the footprints of institutions. But now we know large group of small investors can also make an impact. I hope, guys, this had opened your eyes and you would have got a different perspective to look for in the stock market in the future. I believe that you will take utmost care going forward with your investments. Thank you for listening to us. If you liked the video, do share among your friends and subscribe our channel for similar such videos in future.
ये हमारे ट्रेड्स है, ये हमारा इस मंथ का प्रॉफिट है और हमारी पार्टी हो रही है।
Hey everyone, I'm Stuti Agarwal and welcome to Investing Advisors channel. So for today's video, I would be discussing about my trading setup and strategies that I use for trading derivatives. So to begin with, I would like to tell you about what kind of strategies that I make. I usually trade on strangles and straddles. It is quite a frequently used strategy in the market. So for Bank Nifty, so my majority of my trades are on Bank Nifty and Nifty. These are the two indexes that you can trade on. And also I sometimes like to pivot on stock options as well. So this is the chart for Bank Nifty, which is set on daily. So as you can see over here, I've made use of few of the trend lines. And also I use two of the indicators, which is the moving average 50 days close and exponential moving average 50-day close. So moving average and exponential moving average basically mean that they have taken the past 50 days candles into consideration. So moving average gives equal importance to all the 50 candles, and exponential moving average gives more weightage to the recent few candles. So I trade on the crossovers of the indicators. So basically if the red line is crossing over the blue line, then that would be a bullish signal for me. So basically I would make a trade over here, as this is a small crossover that I'm getting on Bank Nifty chart. So and I would sell the contract over here when the red line is moving below the blue line. So basically coming to straddles and strangles. Strangle basically means that when you are selling a call option, which is OTM, and a put option, which is OTM. So over here, as Bank Nifty right now is at 35,000, almost 900. Then I've taken a call option of 37,000 and a put option of 34,600 into consideration. So I'll show you the right now what the premium is. So the premium looks like for 37,000 call option, the premium is at 60, and for the put option it is at 48. So basically, if you're trading into one lot, then you would be getting the sum of this multiplied by 25, as 25 is the lot size for Bank Nifty. So coming on the straddles, straddle basically means when you are selling the call option and the put option of at the money contracts. So for at the money, I've taken 35,800 contract over here. So this is the call option and this is the put option that you can sell. So basically, the option sellers have got an edge by the theta decay. So even if the Nifty is not moving anywhere, then also the option sellers would be gaining out of it. If let's suppose the Bank Nifty is moving directional, let's suppose it is at 38,000, it has moved up to 38,000, then the option sellers would be losing a lot because of the call option that they have sold, because they were not expecting the price movement to go above 37,000. As the VIX right now, which is the volatility index of India, is at 13 right now, which is quite very low. So strangles and straddles have given quite a good return to the option sellers. You can compare the VIX by the VIX that was in March 2020. It was at 80 or 90, which was quite a lot. So that means that the premium amount for, so let's suppose that the premium amount that you were seeing over here, which is at 60, at that time, it was probably selling at 600 or 700 or something like that. So now I'll show you the stock option that I've traded on. So this is the chart for Bajaj Finance. I've taken two trades. I'll show you the contract for the July option that I traded on and the August option that I traded on. So as you can see that I've made a few of the trend lines over here as well. Trend lines are basically made on the amount of touches that the stock price has given. So the upper segment becomes the resistance and the lower segment becomes the support for it. So this is the contract for 6,200 call short that I did for the July expiry for Bajaj Finance, and I took the contract on 1st of July and squared it off on 28th of July. The price which I sold on was 146, and the one which I squared at was 63. So I gained on the difference of this multiplied by the lot size, which is 125. So basically, my rationale for this was on 1st of July. So we were at around 6,000 on 1st of July for Bajaj Finance, and I had squared it off on 28th of July, which was over here. So as you can see that it wasn't that good, because when I had sold it, the stock was at 6,000, and since it was a 6,200 call, so I was not worried about it since it was trading below 6,200. So I entered the contract quite early on 1st of July. Even though the setup was the same, I had not expected it to go back to test the resistance and then come down. I thought that it would come down easily after it, but that did not happen. It did go up and test the resistance, and then did come down, and then again it moved up and then tested the moving average back again. But at this time, when it was around 6,200 and it was just going up, I had sold back on 28th of July, as you have seen. So this was for the July contract. I'll now show you the contract for the August option. So this is the August contract that I had taken, which is now of 6,400 call that I had shorted on 29th of July. So the previous contract that I had squared off was for 28th of July, on which I squared it off, and now I had shorted it on 29th of July and took August contract. So basically, I sold it at 195 and I squared it back at 59 on 11th of this month, which is August. So on 29th, since I now know that the resistance is this trend line which is going up, so now I took a bigger bet. So on 29th of July, the contract was at 6,360 and I had shorted 6,400 call for it. As expected, the stock did move down and tested the moving average that we have drawn. It came down to 6,000. That was the day that I squared off the contract, just because I had two rationale. Firstly, because it had touched the moving average that I have made, and also since it is a large cap stock, I did not expect it to go down that sooner. So I thought that it might bounce back and test the resistance, or probably just break out. So I sold the contract over here and did not trade again on this stock. So as expected, it did, go up, and now it is currently at 6400, which was the strike price that I had with me. So like this, you can make trend lines and make use of different type of indicators. Option selling gives you a leeway of making a range and trading on it. But the amount of accuracy and precision that you need is more for option buying as compared to option selling. So initially, I would suggest that come with a little amount of capital just to get a grip of the market, and you can start with Bank Nifty options or any type of options. Just do not get into stock options too early because it is very illiquid. I have personally been stuck with a few of the stock options. So it is suggested that you should come with some capital that you are ready to use. You can get a grip of the market, and then you can infuse more of the capital then to start probably option selling as well. So that's it for this video. Do let me know in the comment section what kind of videos you are more expecting out of us, and we would be coming up with more such videos for you to understand about the trading and investing in stock market. And thank you so much. Happy investing.
Hello viewers, welcome back again to our channel Investment Advisors. Wanted to share with you all the weekly analysis that we had updated 5 days ago on this channel for May 6th weekly expiry. Based on the same, we had taken the trades on Bank Nifty. All the positions that you see we took were fully hedged, meaning to say if Bank Nifty would have closed anywhere between range 30,600 to 34,300, we would have not made a single rupee loss. So looking at the screen, what you see is we have made a good profit, which is 3,90,000, and this is only for the first week of May 2021. Seems to be a good start for the month. Do like and subscribe to our channel for more such videos. If you want to learn similar such strategies,
Hello everyone, I'm Stuti Agarwal and welcome back to Investing Advisors channel. So in the previous video, we talked about the basics of technical analysis and the different chart patterns that exist. So for this video, we would be talking about the indicators that you can make use of for doing the technical analysis. So let's begin. So these are the 4 types of technical indicators that exist. First one is the trend indicator. Then we have momentum indicator. Then we have volatility indicator. And lastly, we have the volume indicator. So let's go through each one of them. So the trend indicator basically tells you in which direction the market is moving in and if there is a trend at all. So over here, I've taken the moving average 20-day close and a moving average of 200-day close. This moving average would basically take a 20-day candle into consideration to give you sort of a average line over here to tell you the direction in which the price is being moving and the momentum is. And then I have also taken a medium term perspective, the moving average of 200 days close. So this would take previous 200 days candles into consideration to give you an average of how the price has been moving. So the pink line over here signifies the moving average of 200 days close, and the blue line is for the moving average 20 days close. So as you can see over here that for March 2020, the price, which are the candles over here, the price moved below the moving average 20-day close and the moving average of 200-day close. So moving average 20-day close is basically for the shorter term, and 200 days is for medium term, you can say. And also over here, as you can see right now, as of August of 2021, the price is moving above the pink line, which is the moving average 200-day close, and the 20-day close is somewhat near the recent price, which is there. So which signifies that the in the medium term, the Bank Nifty is moving a little bit bullish. And over here in March 2020, it was bearish in the short term as well as in the medium term. So secondly, we come to momentum indicators. Momentum indicators are used to determine the strength or weakness of a stock's price. Momentum basically measures the rate of the rise or the fall of the stock price. So over here, I've taken RSI, which is the Relative Strength Index, into consideration. This is the Bank Nifty chart again. And so RSI is a default, by default, it is set at 14, which means that it is taking previous 14 days candle into consideration while making these kind of lines. So maximum and minimum is, so the minimum for the range is 0 and the maximum for the range is 100. And the part which is highlighted over here is 30 to 70. So 30 is the situation of oversold and 70 is the situation for overbought. So this basically means that as the price is moving, when the RSI touches 30 or is below 30, it means that it is an oversold condition. At this point, you can probably buy the stock, if so. And as you can see over here as well, in the April of 2021, the Bank Nifty's RSI just touched 30. And when the RSI is at 70, it means that the price is at overbought condition. So over here, as you can see, near around like February or January, the Bank Nifty was at overbought condition as it had moved just above 70. So thirdly, we have volatility indicators, which measures how far the security stretches away from its mean price, higher or lower. So over here I've taken Bollinger Band into consideration. So Bollinger Band basically, by default, it is set at 20, which means 20-day close, and 2 is the standard deviation. You can change it. You can make this, probably you can change 20 as 30, 40 or whatever you like. It basically gives you a sense of the mean. And for the standard deviation, you can take 3 standard deviation, 4 standard deviation according to you. So this is the mean line, which is right now at 20-day close. And the standard deviation that we have taken is 20, which is the upper band is plus 2 standard deviation and the lower band is minus 2 standard deviation. So this basically gives you a sort of a range in which the stock or the underlying is expected to go. So previously, so as you can see over here as well, that Bank Nifty has respected the Bollinger Band quite efficiently in the recent past. So as it was dropping over here in near like mid-March, it was it had touched the lower band, and also it bounced back from it, and then it had touched the upper band over here, and then it was just moving well in between the Bollinger Bands. Then lastly, we have the volume indicators, which are used to determine the balance between the securities demand and supply. The different types of volume indicators are Chaikin oscillator, OBV, ROCV, etc. So this is the chart for Bank Nifty again, and over here I've made use of some of the tools which are the basic lines and horizontal line or probably the vertical lines. So over here I've drawn a few lines. Basically, lines are drawn on the amount of touches that the price has given you. So as you can see over here, that right now in the recent past, Bank Nifty has been well into consolidation phase. So I've drawn a line over here and over here. It is very subjective. It changes from every trader to trader. Everyone has got a different sense of how they look at the charts. I tend to draw tools for the medium term and not too short term. I also just put my chart into daily, as I don't do intraday trades. If you are into day trading, then you can make use of the RD charts. If you are probably swing trading, then you can make use of daily charts. Or if you're just investing for the long term, then you can make use of the monthly charts or the weekly charts as well. So before I close this video, I would like to highlight few of the things that you should remember before you start practicing technical analysis. So firstly, keep the chart simple and easy to read. You should only use like 2 to 3 indicators so as to read it quite efficiently. Then use very few indicators. I would suggest you to use 1 to 2, probably one momentum indicator, one trend indicator. Then backtest your strategy and setup. So backtesting basically means that you are using a strategy. You are just choosing one strategy. Let's suppose you're choosing trend analysis or trend indicators. Then you can backtest on the particular stock that you have taken. Let's suppose that you've taken a Reliance stock. Then it is not every time that a stock would be respecting your kind of strategy. So you should first backtest it so as to reassure that if the stock is correct with the kind of strategy that you would be using. Don't stick to a strategy if it does not work. So if probably Bollinger Band or moving average is not working good for you, then you can change your strategy. You can look into 2-3 more strategies if so. Try before you buy. So always a paper trade before you are using a strategy. So if let's suppose that you're using a Bollinger Band, then you should probably take 2-3 trades just as a paper trade, and then you can apply it in real. Then make use of a stop loss to avoid big losses. Even though you might consider that your technical analysis is very efficient and would give you good returns, but there are black swan events as well. You should keep that in mind, and you should always make use of stop losses to avoid big losses. And always respect your trading system and don't deflect from it. If let's suppose your strategy, which has proven in past as well, if it is telling you to just use Bollinger Band 20-day close, and this is the point at which you really have to exit your position, you really need to respect your system at that point of time and not just behaviorally act in another way. So that's it for this video. I hope you really liked it. And there are a lot of other indicators or chart patterns that I might not have covered. But if there is something in particular that you would like me to cover, then do let me know in the comment section. And I would be also coming up with more such videos. Do like and share it with your friends. Thank you.
Hello all, welcome to today's Market Vision wrap-up. In this video, we will break down the key movements in the Indian and global markets, covering major indices, sectoral performance, crude oil trends, and international market reactions. So let's begin. Indian indices rallied strongly. Nifty surged 161 points, roughly around 0.67%, and had closed on a strong note. Similarly, Sensex jumped 520 points, roughly around 0.65%, reflecting broad-based buying. Overall, the market sentiment remained positive and strong global cues and sectoral strength performed really well. Sectoral indices traded really strong. Today was a fantastic day for key sectors like IT sector, which skyrocketed 4.34%. The major gainers from today were HCL Tech, Coforge, and Oracle. Auto sector as well rallied 2.38% as there was strong demand and positive earnings outlook boosted the stocks. Pharma moved around 1.4% up. There was a defensive buying that continued. Realty sector again gained 1.33% today because there is improved housing demand supporting the sector. So IT and auto were the stars today, while pharma and realty also contributed to the bullish momentum. Crude continues to bleed. WTI crude slumped 2.8%, trading at $61.89. Brent crude as well fell 2.52%. Now it is trading at $65.74. Rising global recession fears and weak demand outlook is weighing on the prices. For India, falling crude price is positive as it will keep a check on the inflation and current account deficit. Lastly, we see global markets rejoicing. On Asia front, Nikkei was up 1.89%. Shanghai was slightly down by 0.1%. Hang Seng, however, had surged 2.37%. On European markets, DAC was up around 3.17%, CAC gained 2.3%, whereas FTSE rallied just 0.96%. On the US markets, Dow Jones is up 1.58%, S&P 500 rose roughly 2%, and Nasdaq soared 2.8% because there was tech stocks which rallied. So positive momentum across the major markets driven by easing inflation concerns and strong corporate earnings has helped the markets to rally worldwide. Now let's discuss from the perspective of charts and open interest to understand how our markets are expected to open and trade for tomorrow. As you could see, this is the Nifty 50 chart. So we always refer the daily candlestick chart. Now if you see, today we opened on a higher note, um, and then from there we had slipped down in maybe another with the start of the market around at 10:45 11 we were almost towards the fag end of the day, and then from there we saw a strong buying somewhere around at 11 o'clock am, and then the buying momentum continued till it moved towards the higher highs. It almost closed toward the beginning of the day from where the market had opened today. So overall, there was a recovery in the markets. However, there seems to be some negativity that has already been seen. So this candle that it has formed is kind of hanging man. So now we have to see tomorrow how the markets are expected to open. Suppose if market starts trading below these levels of 24,200 odd, then we would consider this as a negative for a Nifty, and then from here on we might start seeing some dips coming in. So the immediate support for us is roughly around 23,800 odd levels, from where we had significantly seen the buying happening. But yes, as we have been discussing, that the movement from 23,800 levels to 24,800 odd levels is going to be difficult for Nifty. We might not swiftly cross these levels and start trading above. We might continue to consolidate in this range for at least 2 to 3 weeks time. Now that we already have the news, bad news in fact, the terrorist attack on the Palgham, Kashmir. So this might keep our markets under check, because Indian government is again expected to take some actions, and we have to see to what magnitude these actions would be taken and how it is expected to overall impact us on the news front as well as on the economy. So markets definitely would fear any negative news or volatility. So we might see some trade range bound happening at least for 2 to 3 weeks, until all the bad news fades out. So till then we might continue strictly in the range bound scenario. If the situation worsens, then we might start trading below this level, and then start maybe inching downwards, and can come roughly towards 23,000 odd levels, which would act as a strong support. So until we trade on the higher levels above 24,000 levels, at the moment there is no much worry. Maybe once it starts inching towards 23,800 is what we have to turn cautious and cut off all the long positions. So till then we are in the safe zone and might trade range bound with the upside bias. Now let's see from the perspective of open interest. So on open interest, in fact, even yesterday we had discussed that after 24,500 odd levels, we do not have any strong resistance. So in case if the buying emerges swiftly, we might straight move towards 25,000 levels. But given the kind of market news that typically for the uh, India front, if we see, has not been that positive. though despite the world markets have been really performing well, we had, in fact, not performed so great in terms of the broader indices today. All the broader indices, did not perform so well. There was mixed kind of reaction. Certain sectors were positive, whereas other sectors negatively performed. So there was no broad-based buying. So till that time, we might see some range bound kind of, trading that is expected to happen in the range of 24,000 odd levels to 24,500. So we are just 170 points away for tomorrow's expiry. So as long as we trade below 24,500 levels, we might continue trading in the range bound. Once we cross beyond 24,500, immediately we will see sharp rally coming in, and then we might touch 24,800 odd levels where we have immediate resistance. Once that resistance gets crossed, then we will reach towards the round figure of 25,000 where we see huge resistance coming in, which seems to be difficult until the end of this month expiry. So we have just maybe 5 odd trading sessions in April month. So till then, we would be closely trading in the 500 to 600 odd points range. So overall on the PCR front, if we see, it is it is one trading overall and zero point 0.8 at the money. So it seems to be quite positive, but yes, given the way how the charts have behaved today, it seems to be difficult for Nifty to close above 24,500 or close the weekly expiry or monthly expiry above 24,400 odd levels. So tomorrow already we could see the gift Nifty is trading 70 to 80 odd points down, despite the world markets, including US markets, have really performed well. So this is just a India specific scenario or issue, why our markets have not been following the world markets, typically despite the US performing really well. So since there is a bad news that is around us, so we might have to trade cautiously until 23,800 levels breakdown at the lower end, and 24,500 to 800 level that breaks out at the higher level. So till this range, it is okay. We might trade in consolidation. Now let's talk from the perspective of Sensex. So even Sensex shows kind of, doji, or maybe the kind of, hanging man. So as we had already discussed, this is the zone where we have huge resistance for Sensex. So we had immediately touched today, or maybe opened at the higher level, but from there we had uh, swiftly, fallen down at the lower end of previous days closing. We saw sudden buying that had emerged, and then after 11 a.m. we saw strong buying which continued towards the higher opening levels that we had seen in today's morning session. So overall, Sensex had closed strongly above the previous day. However, there doesn't seem to be strength in the markets for further to be taken at the higher levels. So we might, trade in range bound for at least, 1 to 2 days until the bad news that surfaces around, and post that, if the buying emerges further, then we might see Sensex again moving upwards and might approach towards the previous resistance of 82,000 levels. So till the 82,000 is crossed, we might trade in a range bound kind of scenario. So the major caution that has to be kept is somewhere around at 79,500 odd levels, where we had, from where we had, starting to see the weakness. So immediately once we start falling or trading below the 79,500 odd levels, that is the first trigger for us to cut down on the long positions. We can take at the money kind of calls, which will help us to maybe sustain and not make losses despite there emerges a positive kind of scenario maybe in a day or 2 days kind of session. So overall, we are trading in a weaker kind of momentum. So we might start seeing some pressure coming in at these levels, and we might start trading below the previous days close. So once that happens, that would be the first trigger for cutting down on long positions and taking at the money calls to just see how the market is expected to behave overall. So Sensex has to be traded cautiously until maybe 2 to 3 trading sessions. So now let's see from the perspective of open interest. So on open interest, there is like a tug of war at 80,000 odd levels, where both buyers as well as writers have been fighting to push each other, and uh, call writers have been trying to uh, take the markets down and trade below 80,000 levels. At the same time, there is a good strength and momentum that is seen on the put writers, and they have been holding the markets. So as long as we start trading below 79,800 odd levels, till then it is okay. Once it starts moving down, then we only have the support at 79,500 odd levels. So for 29th April expiry, we have almost 6 roughly days. But yes, uh, there is strong belt up that is happening on the call side at every 500 odd points. So we might see some resistance at the higher levels going forward, and till the bad news remains, we might not be moving swiftly higher. So at the lower levels, again we see strong support at each 500 odd points at 79,500 levels, 79,000 levels, and the last support is at 78,000. So till the time we trade in the range bound scenario of 79,500 odd levels until 80,500, this 1000 points range, we need not too much worry, because markets might then consolidate and not maybe trade beyond these parallel lines. So as of now, PCR is zero point 0.9 overall, and again 0.86 at the money. So majorly we might trade at least for 2 days in this 1000 point range, and then once there is a clear indication that is seen, and based on the world market cues, how the rest of the world markets are moving, so we might start taking the stance as per the global markets, and then accordingly trade. So yes, we are in the tight range now of 1000 points. So until the breakdown or breakout, we can trade in the consolidation phase. Now moving on to Bank Nifty. So on the Bank Nifty side, it is a bearish engulfing that we had been seeing. So it is not a full engulf that we had seen, but yes, a big candle that has been created. So it opened higher, but then there was a selling pressure from the start of the day itself, though in between markets tried to recover, but there was a good selling pressure on all the banks today, as majority of the major private banks sold off. So that is the reason we were unable to recover despite positive cues coming in from the major indices like Nifty and Sensex, as there were lot of positive sectors like auto and IT, which had taken the Nifty and Sensex index higher. However, banks have been trading negative today. So today's closing was below the yesterday's closing, and there was a sharp downfall that we had seen at the higher levels. So this is the first indication of the weakness in the Bank Nifty. However, since we had seen a strong rally that had already emerged, so this is the first negative signal among all this positive uptrend movements. Now we have to trade here very cautiously. So we might see a kind of movement where it was all rallying and positive, and then from here we fell down. Now this might continue until maybe the previous resistance levels, which will act as a support, so roughly around 54,500 odd levels. And from here we might see the turnaround happening again, and bank nifty inching towards 56,000 levels, 56,500, 57 and above levels. So we have to closely track and monitor 54,500 odd levels, from where we had swiftly seen the markets moving up. So as long as this 54,500 level do not break, we should remain long in bank nifty. And with the immediate first sign of recovery, where from wherever we see the turnaround happening or the reversal happening, there we can quickly go long, because there would be a good momentum that we can catch up. Roughly around 1000 to 1500 points can be easily captured once we see the turnaround happening from here on. So we have to trade cautiously here until the 1000 point range from here till 54,500. If we see the reversal immediately coming in, then we might see the higher highs in bank nifty again, which would take the bank nifty to 52-week highs, or maybe all-time highs. So as long as there remains positive momentum in the banking stocks, we can continue to hold the long positions. Now from the perspective of PCR, so we are trading in the tight range bound scenario, where we have the put writers also holding and not letting it the bank nifty to fall. At the same time, we have call writers also who have strongly been holding at the resistance levels. So today we had seen bank nifty open roughly around 55,800 odd levels, and then it moved higher towards 56,000 odd levels. Immediately once we inched towards 56,000, we saw a strong selling pressure that had come. And today's open interest positions, what we could see for 56,000 strike, definitely talks a lot about the monthly expiry for bank nifty tomorrow. So maybe we would see a bank nifty closing in this range, or there are high possibilities for it to close around 55,000 odd levels, or below 55,000, maybe 54,800 odd levels. So till then we still remain positive until 54,500 breaches. So yes, tomorrow being the monthly expiry for nifty, bank nifty, fin nifty, so we might see a lot of volatility coming in, and we have to trade cautiously, given the fact that there is already a negative news of terrorist attack peculiar to Indian markets. So as long as there is no major sell off, we will be trading in the range bound scenario. So overall on PCR front, it is 1.1, and at the money it is 0.88. So it is from the trading perspective for tomorrow's session, it is mildly bullish to positive. Lastly, on the fin nifty had the clear bearish engulfing candle. So this itself signifies that there is a selling pressure that has come in fin nifty, and from here on we might start trading on the downward journey. Now this downward journey might be for 3 to 400 odd points, and then at 26,000 odd levels we would sustain, provided there is no sharp major sell off that comes in. So as long as fin nifty is trading above 26,300 odd levels, that is the um, today's lower levels, till then it is okay. If we open tomorrow below those levels, then the sell off is again expected to continue tomorrow. So given the volatile session that is expected due to market expiry, we might see some sharp moves both on the upside as well as downside. So we have to trade cautiously and do not get caught in the volatile markets. So overall, since VIX is trading in the range of 16, we might not see sharp moves though, of like 300 400 points on either side. But yes, tomorrow's trading session is going to be weak for FinNifty at least, because there have been a good sell-off that we had seen at the higher levels. So tomorrow again we are expected to see some sell-off or a kind of range bound scenario in which we would trade. Let's look from the perspective of open interest. So on open interest, we could very clearly see that at least for tomorrow's monthly expiry, we are not closing above 26,500 levels for tomorrow, given the kind of huge open interest that we had seen that was built on the call side. At every 100 points, again we see good open interest built up that was seen today. So majorly, FinNifty is expected to close below 26,500 odd levels. Now, if we start moving downwards, maximum we might see towards 26,200 odd levels as the first support, and then 26,000 levels as the second support. So tomorrow we might not expect swift movements towards the downside. So as long as 26,400 300 odd levels is held, we might not see sharp downfall coming in. So overall on PCR front it is zero point 0.9, and at the money it is 0.57, which is not at all bullish. So overall on FinNifty we could see a lot of selling pressure that is expected to come in, which would take FinNifty down below 26,500 odd levels for tomorrow's monthly expiry. Lastly, on the FII and DII data. So foreign institutions on the index futures are short by 70,000 odd open interest contracts. On stock futures, they have increased their long positions to 18.19 lakh contracts. On call options, they are long 1.46 lakh contracts, and on put options, they are again long 99,255 contracts. So net FIIs have turned positive or long on index options by 46,000 odd contracts. On proprietary trader side, on index futures, they are mildly negative with 2,700 contracts. On stock futures, they are positive and long with 40,500 contracts. On call options, they are short by 48,000 contracts, and on put options, again they are short by 1.38 lakh contracts. Now net again, proprietary traders have went long today with roughly around 90,273 contracts. So overall, both FIIs are long on options, index options, and similarly proprietary traders are long on index options. So now let's see if clients are net short. On the client or retailer side, if we see, they are mildly bullish on index futures. On stock futures, they remain long with 17.05 lakh contracts. On call options, they are short by 98,000 contracts, and on put options, again they are short by 31,000 contracts. So net retailers are short by 66,500 odd contracts. So when both FIIs and proprietary traders are long, and retail traders along being short, though there have been global markets which remained positive, but somewhere there was a weakness that was seen in today's market overall in major indices, barring maybe Nifty 50 and Sensex. Rest other indices traded not so positively. So we might see some weakness tomorrow on the monthly and weekly expiry for Nifty. So overall, if we trade below the previous days, like today's session, then it is client who is going to or retailers who is going to mint the money, and FIIs and maybe proprietary traders would lose. Now, from the perspective of cash market, DIIs have sold 1,234 crores, and FIIs, however, have bought to the extent of 3,333 crores. So roughly around 3 times FII has absorbed the DII sell-off positions. So as long as FIIs remain positive long on the Indian indices, we can remain intact and positive, because there would not be a lot of huge sell-off that is expected to be seen. So overall, from the trading strategy perspective, if we have to stay bullish, but yes, watch for the profit bookings at the higher levels. So today's market rally was broad-based, supported by strong global cues as well as sectoral strength. Uh, as long as there is positivity across the world markets, we might stray and remain positive. But if there is any India specific news that comes in, then we might sharply fall and take down the immediate resistances what we have across all these four indices. So that's it maybe for today. If you like this video, please don't forget to share and subscribe for our daily market updates. So drop a comment. What is your take on today's market movement, and did you like today's analysis for tomorrow's market approach? So if yes, then give a thumbs up and comment in below this video. Thanks. See you until tomorrow's trading session. Hello viewers, welcome back again to our channel InvestWink Advisors. You all know we have initiated with a new video series on weekly trend analysis for indices. Last week we had shared our analysis on May 20th weekly expiry. You can watch the video in the link above. Based on the same analysis, we had also taken the trades. The profit we generated for the week was 3.6 lakhs. If you have not watched the video yet, the link is available here. Now let's begin the trend analysis for May 27th expiry. Since it's also going to be monthly expiry, so be prepared for volatility. If we look at option chain analysis on Nifty, on put options, 15,000 strike has the highest open interest contracts of 47 lakhs, followed by 15,100 and 15,200. Each of these strikes has 27 and 21 lakhs open interest contracts respectively. But what noteworthy to check here is 15,200 strike has decent open interest built up, which is very evident with the change in open interest percentage. Considering these aspects, we can very well say buyers are confident of Nifty not falling below 15,000 in this expiry. And in worst case scenarios, we can see a fall can come until 14,750 levels based on the last 3 years data for the May month. On the other hand, call options 15,500 strike holds the highest open interest positions with 48 lakh contracts. Further below, we see 15,400, 15,300 and 15,200 strikes has 30 plus contracts each with good percentage change in open interest. With this, we can understand Nifty may not have big moves in this week, provided no major news, because until today, that is 24th May, the positions taken by sellers suggest they are comfortable with 15,500 levels on upside. So Nifty has strong support at 15,000 and huge resistance at 15,500 levels. Let's look at Bank Nifty option chain. On put side, 33,000 and 34,000 strike has highest open interest contracts with 10 lakh each. Also, there is no massive build up in positions except for 35,000 strike having 145% change in open interest. With this, we can fairly consider buyers are confident Bank Nifty not breaking 34,000 levels in this expiry, but in worst case scenario 33,500 levels can be seen. Whereas on the call side 37,000, 36,000 and 35,000 strikes has highest open interest contracts with 12 lakh each. But important to notice is 35,000 strike has unwind in positions and 37,000 strike has seen enormous change in open interest with 80% increase. This just implies that Bank Nifty can turn bullish. We will have to see if further the 35,000 call are unwound and addition is seen in contracts in upper strikes. If this happens, Bank Nifty might close above 35,000 levels as well in this expiry. So Bank Nifty has strong support at 34,000 or 33,500 levels and huge resistance at 36,000 levels. Based on the volume and open interest analysis, we can see the max pain for Nifty is at 15,050 and Bank Nifty at 34,500 levels. That means if these indices expires at these strikes, maximum buyers will lose money. But since max pain theory is derived by open interest, the addition or reduction in contracts across different strikes will change the max pain. Now let's take a look at the FII and DII data. For 24th May, FIIs are short on futures by 370 crores and long on cash by 585 crores. Whereas DIIs are short on cash by 708 crores. With call and put data, we can fairly believe FIIs are neutral with their positions. Coming to the events, we do not have any major global and local events for the week. However, we have companies announcing the results in this week, like Berger Paints, Page Industries, Eicher Motors, and 3 pharma companies, Sun Pharma, Pfizer, and Glenmark. These stocks will have result-specific movements. With this, we conclude our analysis for the week. Thank you for watching the video. If you liked it, give thumbs up and encourage us. Do not forget to subscribe to our channel. Till then, see you again. Happy trading.
Hello everyone, I'm Stuti Agarwal and welcome back to Investing Advisors channel. So for today's video, I would be showing you some of the strategies that I have been recently using, which is the credit spread, and I would be also talking about the debit spread strategy. It is also very important for you to know that at what time of the market, at what point of the market your strategy would be giving how much losses and profits. And even though there are quite a few websites that you can use for it, like Obstra, it is also utterly important for you to jot it down on a piece of Excel sheet and also know and identify that how your strategy would be reacting to the certain market conditions. So I would be starting off with credit spread today. So let's begin. So over here, credit spread is basically nothing but you're buying a call and you are selling a call. The strike price are different, but the expiry date is same. So the call which you can sell right now is near OTM you can take, or near ATM you can take, or you can take a bit of OTM. I would be taking at around, since right now the spot rate for Bank Nifty is around 35,600. So I would be taking the call for 36,000, and the call which I would be selling would be 36,300. So over here, you can write the spot rate, which is basically the spot rate of the Bank Nifty on the date of expiry, which is 23rd of December. So over here, we can take like a difference of 100 points, and we can start. I would like to start it by 1,000 points above and below. So we can take 34,700 and we can go. We can take this up to 37,300 would be fine. So leg 1, I would like to create. So legs are basically that how many option positions you are carrying. So leg 1 is for the call buy, and for leg 2 is for the call that you have sold. So over here you need to write the premiums for the call that you have bought. So for 36,000, it is 265. 265, and for the call that you have sold, it is 167. Sorry, this would be call that you have sold, and this would be call that you have bought. So the spread is basically the difference amount that you would be earning between these two. So for your leg 1, basically if you are like selling a call, so you want the market to end below 36,000, right? So above 36,000 your losses would start to come, but below 36,000 your profits would be capped to 265, which is the premium amount. So we can write this as this much, and we can freeze this. So till 36,000 we would be incurring profits, and your losses would be till the amount of your strike price minus the spot rate plus the premium, because premium is the amount that you have already got in your account and nobody can take this from you. So that is, and you can freeze this amount, which is the strike price, because this is not going to change, right? So now you can bring this down to 37,300, and these are the losses that you would be incurring if you are like selling naked calls, and the market ends at 37,300. So for leg 2, we have taken the call that we have bought. So your losses would be capped till the point of the premium, which is 167. So over here, I can take this amount, this amount, and I can freeze this amount. And your losses would be the loss that you would be incurring from the premium is still the part of 36,300. So I can bring this down to 36,300. And now the scenario would change, because now your strategy would give you profits, but the premium amount would be deducted from that. So we can take the spot rate minus the strike price minus the premium amount that we have paid to the market. So we can freeze the premium amount, and we can also freeze the strike price that we have got. So this gives us 36 in negative. So our losses are getting reduced from 167 to now 67, and this is the profit that you would be incurring if the market would go till 37,300. But remember that the spot rate right now is 35,600, so it's a pretty long shot. Now this is now you need to calculate the full how much amount of profit or loss you will be incurring from the whole strategy, because you're taking both the legs at the same time. So you can sum this up. And you can bring this down. Yeah. So basically, your strategy would be giving you profits only till 36,000, above which you would be incurring losses. So one thing you need to note over here is that if you would have sold options of, if you would have sold a call of this amount of 36,000 strike price, then you would be incurring major losses at 37,300 of around 1,000 points. But if you would have made a credit spread strategy, then you would be only making losses up to 200 points. So this is the a benefit of hedging and making a different amount of strategies. There are quite a lot of strategies that you can venture out into, but this is one which is pretty easy, and it does not require a lot of testing. So this is quite lucrative if you're like expecting the markets not to go overboard, and you're just like expecting probably a stable kind of a market, or not to go above a certain point. So this is the credit spread strategy. Now we can come to a debit strategy. So basically debit strategy would also be similar as to you can take this amount. Probably I can change the so the call, now you are buying the call and of the ATM one, and you are selling the OTM call. So basically the difference between the two is the amount that you are paying to the market. And now I can probably take ATM. So over here I'll just change strikes just to show you. This is ATM and this is OTM. And the spot would be similar. So for the leg one, we also need to like identify the premiums. Premium for the call would be the same, even though we are selling it, and 35,700 is over here, which is 406. So for the leg one, we can so if we are buying the call, then below 35,700, we would be incurring losses in this up till the amount of the premium, so which would be negative and this premium amount. And you can freeze this. You can bring this down to 35,700, which is over here. From 35,800, you would start to make profits, but your premiums would be deducted. The amount which you have paid to the market would be deducted. So this amount minus your premium, minus the strike price and minus the premium that you have paid. You can freeze this amount and you can freeze these two. Yeah. So now, as you can see, that your losses are getting reduced, but you are still incurring the losses. So basically, you are making profits only from 36,200, and the spot rate right now is 35,600. So you need basically 400. You need 600 points to break even. Actually, 500 points to 300 points to break even. Actually, more than 300. I would say you are taking 500 points to break even. Yeah, from 36,100, you're actually breaking even. So that is quite a lot. And now the leg two, which would be the call that you are selling. So you would be profiting. You would be profiting if the index is below 36,000. So up till 36,000, you would be getting the premium amount that you have collected. So you can take this amount and bring this down to 36,000. You need to freeze this. Yeah. And from 36,100, you would start to make losses. But you would be like deducting the premium one, obviously, because you are getting it. So this would be your strike price minus the spot rate of the market plus the premium amount. Yeah. So basically, your profit is getting reduced over here. You can freeze the premium amount, and you can also freeze the strike price. Now you can bring this down, and yeah, you're making losses of up to 1,000 points for the leg two. But now you need to sum both the options, because this is the amount that you will be getting. So this is the part where you will be profiting, and as you can see that your losses are reduced even though your profits are capped, but your losses are also capped. So you need the market to be above 35,900, and you would like make profits on that. So this is the one quantity that I have taken, but obviously there is a certain amount of lot that Bank Nifty has got. So for Bank Nifty it is 25, so we can multiply this by 25. This is the amount that you would be getting in your account on the expiry date if the market is ending above 35,900. And if you're like making the strategy just for like one lot, then this is the amount, but for multiple lot obviously it goes up accordingly. So basic rule of thumb is that for if you're like buying the option, then it as I showed it to you, that you're basically like subtracting the spot rate minus the strike price minus the premium which you have paid to the market. So we can write it over here: spot minus strike price. This is for the option which you have bought, and option which you have sold, for that it is the opposite. So strike price minus the spot rate. So this is something that you can remember, and you can also test this strategy. You can make different amount of strategies. There are so many like strangles, straddles. I will be talking about most of strategies in my further videos. Hope you liked it, and do let me know in the comment section what else are you expecting from us, and we would surely make other videos to help you out more. Thank you so much.
Hello viewers, welcome back again to our channel FINNIFTY Advisors. We started with series of videos on weekly trend analysis. Last week we could not share the trend analysis video for 10th June expiry due to ill health. We have recovered now and feeling better. Thanks for your continuous support. Let's start the analysis for 17th June 2021 weekly expiry. We are in options chain data for Nifty. On put options, we see open interest positions taken for wide range, starting from 15,800 strike. It has 20 lakh contracts. Then on the downside, 15,700 strike has 25 lakh contracts. Further downside on 15,600 and 15,500 strike we have 19 lakh contracts each. Quite unusual what we notice here is 15,800 and 15,650 strikes has huge open interest change of 200% and 176% respectively, which suggests a volatile and swift move on downside can be expected in coming week on Nifty. On the other hand, on call options 15,800 strike has open interest of 27 lakh contracts. Then on upside 15,900 strike has 24 lakh open interest contracts. Further upside 16,000 strike has maximum contracts of 30 lakhs. Even on call side, we have wide positions further above 16,100, 16,200, 16,300 and at last 16,500 strikes each has around 20 lakh plus open interest contracts. Looking at the option chain data, we could analyze the probability of Nifty moving above 16,000 seems to be difficult. So we would urge traders to keep strict stop loss if you have short positions. And the levels to watch out are 15,600 on put side and 16,300 on call side. Now for Bank Nifty. On put options, we see 35,000 strike has maximum of 13 lakh contracts. Then on downside 34,500 and 34,000 strikes has 7.5 lakh and 8 lakh contracts respectively. Further downside on 33,500 strike and 33,000 strike we have open interest positions built with 5.5 and 6.5 lakh contracts respectively. While on the call options, we see 35,000 strike has 13 lakh contracts. Then on upside 35,500 and 36,000 strikes has 12.5 lakh and 11.5 lakh contracts respectively. Further up, 37,000 and 38,000 strikes has 9 lakh and 11.5 lakh contracts respectively. Like Nifty, on Bank Nifty as well, we have wide positions taken on both call and put side. Keep a watch at 34,000 levels on the downside and 37,000 levels on the upside. Let's also check what Max Payne theory suggests. On Nifty, it shows 15,800 is expected levels where the expiry can happen, and on Bank Nifty 35,000 levels is where expiry is expected. To know the detailed analysis, let's check options data bar chart. 15,700 strike has unwind and call options and addition input options, also on 15,900, 15,950 and 16,000 strike. We have 12 lakh open interest contracts added on each of these strikes. So Nifty crossing beyond 16,000 levels seems challenging. Now on Bank Nifty, 35,000 levels is the key zone, as we see huge call and put option additions, and on higher side, 35,500 and beyond, we see small put positions built. But we have huge call options additions built at 35,000 and 36,000, so be cautious if 35,500 levels crosses on the upside. We should also check how biggies are positioned, so let's check FII and DII data. On 11th June, FII are mildly long with 19 crore in cash but had short positions with 122 crore on futures. On the other hand, domestic institutions have bought for 666 crores. The trend shows DIIs have turned positive after 3 selling days, so expect the FIIs to offload their positions. Coming to events, we do not have any global and local events for the week. However, there are few companies announcing the results. Coal India to declare results tomorrow. Thereafter, on 15th June, Jubilant Foodworks, LIC Housing Finance and Power Finance Corporation will declare results. All these stocks will have result-specific movements, so be careful if you hold any positions. With this, we come to an end with the weekly trend analysis. To get regular market updates, kindly follow InvestFinc Advisors on Twitter, LinkedIn, Facebook, Instagram, and Telegram channel. Thanks for watching the video. We hope our analysis helps you to be better positioned in market. If you liked it, do share and subscribe to this channel.
Hello all, welcome back again to the channel of InvestFinc Advisors. Today Indian markets witnessed consolidation as the Nifty and Sensex closed in the red, while global markets, especially the US, saw strong gains. Pharma stocks led the charge, but broader indices appeared tired. Let's break down today's key market movements. Nifty fell 82 points, roughly 0.34%, closing lower amid mixed sectoral trends. Similarly, Sensex as well dropped 315 points, around 0.39%, reflecting cautious investor sentiment. The markets overall is consolidating after the recent gains,